All right. Good morning, everybody. Happy Friday. How are you guys doing today? Good morning, Sophia. Good morning, Gary. Good morning, John Novak. Nice to have you in the room. Guys, I hope everybody's doing well today. Ready to get in, have some fun. Hey, Mike. Nice to see you. Off to a rough start, Gary. Anytime I am off to a rough start, I take a deep breath. I look at my charts. Make sure that are you following your rules? For me, my rough starts usually mean that I showed up wanting to trade rather than wanting to show up and wait for rules. I don't know if that's what's going on with you. I've only seen one trade from you so far, and we'll talk about it. But I think you gave up quite a few advantages on it, which is okay. That happens sometimes. You get in, you have a couple days on sim, you feel a little invincible. So you want to make sure you don't miss anything, right, when you go live. Keep that checklist out. Keep it right next to you. And more than anything, guys, make sure that you're using your checklist entering the trade before you get in the trade, not after the trade to see if you followed your rules. I've been guilty of that before. I thought I would share that little tidbit. Welcome to the room, guys. Carlos, Kiana, nice to see you guys in here again. Rain, it's always good to see you here. Makes me feel better in case I need some technical help. Bruce T, Z, Carl, Ron, T45, Jonathan, Daniel, Alex, always nice to have you guys in the room. Hope everyone's doing well. Hope you're happy. Hope you're ready for holiday weekend, right? Little hot dog eating contest and maybe some fireworks, an adult beverage if any of you guys are old enough for that. Should be a good one. Looking forward to it. My name's Mark Novak. I'm going to run this room today. We're going to talk a lot about enjoying the path, right? Slow rolling into our future as day traders, learning to be chart readers, talking about advantages. For those of you that are newer to Nexgen, it's great to have you here. Excited about you being here, excited about you participating in this class, getting everything that you need to be comfortable with the software, everything that you need to move forward and feel good about what you're doing here. Before I get going every day, part of my routine when my charts are loading is I come to forexfactory.com. Depending on what time you wake up in the morning, this may be a couple hours into your day. This may be right after you wake up if you're in the Pacific time zone like I am. But I'm always checking for news. I want to make sure that there's nothing going on that can move that market, make it erratic, make it crazy. Today is Friday, June 30th. We are in the last day of June, guys. I can't believe it. And at 8:30 a.m., the core PCE price index came out, and it was funny. The S&P moved a little bit. Crude oil went absolutely crazy. But news can make the market bounce. It can make it jump. It can make it change directions. So what we do is we just look. We go to forexfactorycalendar.com. We don't really pay much mind to what's being said, right? We don't worry about what the news is. We just want to know that if the market's erratic, it erases a statistical advantage. Therefore, you may make the decision to sit on your hands and not trade during news releases. Our next one will be at 9:45, the Chicago PMI. It says low impact. Be aware, right? At 10 a.m., we have medium. Revised University of Michigan consumer sentiment, guys. It may move the market. It may not, right? We're talking about potential. We're talking about probability. So knowing that it's going to happen, knowing that it has the potential to move the market gives you an advantage. And it gives you the opportunity to not put yourself in the way of an emotional response from somebody that's controlling an awful lot of market movement. So I do that every morning. That's a part of my routine. And I'm going to talk a little slow this morning. Let this room fill up. But I want to remind you guys, and this is for everybody, there is a path to getting to where you want to be. It's not a difficult path. It's a path that requires a little bit of work on your part. It's a path that's going to require as much work as I'm capable of putting in. And John took a trade, lost a point. That's okay, right? Small losses are part of a positive equity curve. When the pivot doesn't come from a Fibonacci area, guys, that mid band becomes a little bit of a 50-50 scenario. When your trigger lines are split, it begins to take away advantages. 2 divergences says keep your eyes open. 3 divergences when the third is higher says don't give it all away. I think that was a great trade with great management. And guys, we're going to talk about this trade. We're going to talk about why he got into it. We're going to talk about the advantages that were present. We're going to talk about management today. And everything that you see John Novak post in here after the 10 o'clock hour is going to be a rules-based high probability trend trade, something that you're going to recognize from all the discussion that we have in the first hour. And for me, I think it's pretty cool. And I tell him this every day. I think it's awesome that John Novak wrote the software, right? Does a lot of the programming, created the algorithms. And his trading plan looks exactly like the one that we're going to talk about in this first hour. His trading plan includes the trades that we're going to focus on here. And guys, the trade's not a difficult trade, but in order to really learn it, to study it, to trust it, you posting every simulated trade you take in class is going to be imperative, guys. Taking a trade, using that simulator. Good morning, Debbie. Writing why you took the trade, reinforcing those advantages, the good rules, making sure that you understand why you're doing what you did. Because when you have this understanding, well, then it becomes repeatable, right? So post your trades in class, win, lose, or draw. Post your pictures in class. If you have a question about something that you see, don't hope that I cover it in class. Just go ahead and throw it in there. Hey, Mark, I saw this. I think it's a termination condition. Can we walk through it? And the answer will always be absolutely. Let's cover exactly what you need and make sure that you're comfortable. And guys, the next thing is using a spreadsheet. And I find that this is a very underutilized tool. Nexgen provides you a spreadsheet when you sign up for the demo, when you get the software. And the spreadsheet has 2 pages on it. It has 1 page, which is your trade journal. Everything that you do on simulator, every time you pull the trigger, every win, every loss, every break even, goes into this first page. The second page is designed as you learn the rules, as you learn to follow the rules. This creates recognition through repetition. Anytime you take a picture and it's a rules-based trade, right, it gives you all the advantages that we're looking for. Take that picture, get it into the green section, because this is what you're looking for every time it sets up in the market. So the more times that you see this, the easier it becomes. And guys, I'm going to give you a copy of my spreadsheet right now. I just put it in the room, and it has over 240 pictures of rules-based entries. Over 240 examples. What a great thing to do over the long weekend if you haven't already done it. Go through and look at the picture. Start burning that image in your mind, that repetition, those annotated charts. And this is going to be the first piece of the puzzle, right? This is step 1 for new users. We're going to talk about entries for a high probability trend trade. We're going to talk about getting into the market at the best of the best spot on a trade where every indicator on every chart agrees. And what you're going to find is that when you get really good at these entries, when it becomes second nature, when they become easy, the next piece of the puzzle is going to be management. You're going to learn how to manage these trades. You're going to make intelligent stop choices. You're going to make intelligent target choices. But each entry creates a management opportunity. Hey, good morning, John P. So every time you take a rules-based trade, I'm going to show you how to take it mechanically and methodically and without opinion, but each of these trades becomes a management opportunity. And as you begin to study these trades, you're going to begin to recognize patterns in the market, patterns that repeat themselves over and over. And this is where you're going to begin to incorporate elements and nuances into your trading. So take pictures of all of them, right? Take pictures of everything. Post them in the room. Let's talk about them. And then finally, you have a whole section that's called termination conditions. Stop the trend trades if. That's the Mark Novak section, guys. That was my Achilles heel. I traded into termination conditions like it was going out of style. I'm going to teach you how to recognize them, so hopefully you can avoid them. But the key to the spreadsheet is going back, right? When you're out of the trade, when you're out of the moment, when the adrenaline is gone, when you've calmed down, your palms aren't sweaty, and they will be initially. What did I do yesterday? And I think that this is such a key part of what we do and a part of the progression. What did I do yesterday? What worked, right? What's the pattern that brought me the most success? What are the ideas that really put me in the zone, that made things work out? And then again, what didn't work? Maybe I had split triggers. Maybe didn't have momentum. Maybe I'm trading in determination conditions. Guys, if you do a little study every day, you're going to recognize patterns in the market that make you successful, but you're also going to recognize patterns in yourself that might be robbing you of that success. And that's also what I do every morning as I look at your charts and I find these patterns, these things that you're doing that are amazing, and we're going to praise them and reinforce them and make sure that you continue. But we're also going to have the opportunity, you and I, through a discussion, me on the microphone, you on the keyboard, what isn't working? What's kind of taking away your advantages? And we're going to do this every day. Every morning, you're going to see what felt easy and what kept you relaxed, and you're going to understand what felt forced. Good morning, Jose. What made you nervous? And a brief historical study each morning is going to prepare you for the day, and it will accelerate the learning. And guys, I throw this out there about every week. I'm like, if you're not doing this, do it. And then a few days later, I ask, hey, who has been reviewing their trades every morning? Guys, is there anyone in this room that reviews their trades every morning? They come back in, they look at them, and they start the day making decisions. Hey, I'm going to avoid this. It didn't work out. I'm going to embrace that. It did great. Because the people that are doing this have a head start on the day, and they definitely have a leg up as far as getting where they want to be. So that's your path right there, guys. You're going to post your trades. You're going to use that spreadsheet. We spend the first hour of every morning talking about what's called a high probability trend trade. And it comes straight from the tutorial section, right off the education page. And if I go to the glossary of common terms, guys, the high probability trend trade is a trade that is defined when each indicator on every chart agrees for the rules for the trade. Guys, the triggers are going to be the strongest. There's going to be nothing in the way. You're going to enter that market at an area where it's likely to continue. Guys, this is the best of the best. This is a trade that typically wins 70 to 80% of the time. And there's a section called the first 30 days and beyond, focusing on this trade for 30 days, recognizing the advantages needed to take it, recognizing the entry that allows you to reduce risk and maximize profit potential. And what that high probability trend trade is going to do for you is it's going to teach you to read your charts, guys. It's going to make you a chart reader. 90% of your day, every day, hand to God, is going to be sitting on your hands and waiting for advantages. It's going to be looking at your charts, reading your charts, and you're going to get so good at this through your study on the high probability trend trade that you're going to understand where the market is likely to continue, and you're going to focus on that point for entries for this highest probability trend trade. You're going to understand where the market is likely to go, and this is going to help you develop a management plan that allows you to get the absolute most out of each and every trade as you study more, as you become comfortable. And then you're going to recognize where the market is likely to stop. And this is a trend ender. This is where that trend is likely to reverse. This is where the market may react to Fibonacci big enough to take you out of a position that you may be into. You're going to recognize likely to stop places as targets, because where the market is likely to go also becomes an area where the market is likely to stop. Your chart reading is going to help you make good decisions there. This likely to stop point is going to keep you from taking trades in the direction of the trend when it may end. And this likely to stop area is going to be the anchor for the highest probability, the best of the best, the trade that typically wins 70 to 80% of the time. So guys, your chart reading, 3 simple ideas where the market is likely to continue, likely to go, likely to stop. It's all going to come from the rules that we talk about here in the beginning, these high probability trend trade rules. What I need from you is to simulate, is to fire up your NinjaTrader, get that simulator going, and take the trades that you think fit the rules. Annotate the charts. This is what I saw. This is why I took it. Hey, Mark, let's get a little feedback on it. We're going to simplify your trade, guys. Your first 30 days is going to be focused on great entries. It's going to be focused on the highest probability. You will not stay in just the high probability range, guys. Nobody does, because you're going to be brilliant by the end of the first week. And what you're going to do is you're going to find yourself looking, whoops, get over here. It's not letting me. Here we go. You're going to find yourself growing out of that highest probability trade, and you're going to begin to search for medium probability trades. And medium probability trade is just that. It's not the best of the best. It's defined as when most of your indicators line up for the trade. However, a small issue exists. You're going to be able to read your charts and you're going to be able to understand when that singular issue is in your way, and you'll be able to make a great decision on whether or not you have enough advantages to enter the trade. You are going to manage these trades assertively. Your chart reading is going to allow you to do that. You're going to recognize trouble spots, and your chart reading is going to allow you to do that. And you're going to be able to manage out of these if need be, and you're going to be able to get to a zero risk level as soon as it's appropriate, all through the chart reading that you're learning from the high probability trend trade. So I say that we're going to simplify down to 2 trades, guys. I'm going to give you that high probability trend trade. We're going to give you a checklist. We're going to give you rules. I'm even going to give you a simple plan to make sure that you never miss it. And then I'm going to give you some rules and a checklist for a medium probability trade. Just one to get you going, to keep you busy as you learn these indicators. But we are going to simplify, and you're going to learn those trigger looks, and they will become easy because you're going to study. You have 240 examples on that spreadsheet that I gave you that you're going to look at over the weekend, and you're going to burn that image into your mind, making sure that it becomes easy, and you're going to ask for feedback every day to reinforce that you are seeing things the way you need to see them. After class, before the next day, you can use Market Replay, and you can go back and you can retrade the day that you just traded. Guys, over this long weekend, you can go back and retrade the whole week. You can double your repetitions from the week. You can get a year's worth of experience in 6 months. You're going to retrade the day. Fix your mistakes. Take the trades that you skip the trades that you shouldn't have taken, right? Market Replay gives you the ability to hit the pause button and to look at your rules and make sure that they're met before you enter the trade. Market Replay is going to show you the potential of what you can do with rules-based trades, right? Market Potential is going to allow you to go back and trade the market with the advantage of hitting pause, making sure that the advantages are present. And what you're going to do is you're going to see what you're capable of when you become confident and competent with this plan. Take pictures of everything on Market Replay. Guys, I can't stress this enough. I want to see what you're doing. I want to be able to help you move forward. And then you're going to repeat this process every day until you always take the correct trades, right? Because the correct trades are a part of a proven plan, a methodical entry that wins more than it loses. So if you're always taking the correct trades, if you're not breaking your rules, if you're following that plan, well, then you're probably guaranteeing yourself that you can win, right? And then you get to move over to one of those Apex firms. They're always doing specials, and for between $20 and $40, depending on the sale, guys, you can control $50,000 worth of equity on their dime. And if you pass the test, if you manage your risk, if you make the profits, they're going to fund you live, and you're going to have the opportunity to keep your first 25 grand with them and 90% after. 80% after. I don't remember exactly what it is. But this is your path, and this is your plan, and I'm going to ask you to embrace it, right? Remember that you're brand new. If you are brand new, give yourself that little bit of grace. Be new. It's okay. This is your first day of engineering school. This is your first day of med school, and nobody expects you to be perfect. So get those get those pictures in there. Ask for the feedback. There's a copy of your path. And guys, I'm going to give you a picture. This is your high probability trend trade. These are the rules for the high probability trend trade. You'll notice that there's only 3. Simplicity is going to be our #1 focus, guys. There's 3 rules, and these 3 rules are going to give you 3 advantages. A trade is, down here in yellow, a trade is momentum, and that's the advantage provided by rule #1. And you're going to take that momentum and you'll couple it with a clear path, which is the advantage provided by rule #2. And then finally, when that momentum and clear path are in place, you're going to enter the market where it's most likely to continue. And that's the advantage that's provided by rule #3. So guys, you're going to take 3 rules, providing 3 advantages, and you're going to be able to pull this off on only 2 charts. The way I teach the high probability trend trade, the way Nexgen has taught this trade for decades, is you're going to use a large chart and a small chart. And your large chart is going to define direction. You're going to be able to understand the overall trend of the market by looking at the background color of your largest chart. Then you're going to commit to only trading with that direction. And then rule number one must be met on a large chart, and rule number one is going to give you the advantage of momentum, a market that's likely to continue in the direction of that trend. When you have momentum, you're going to make sure that there's nothing in the way to stop that market. And rule number two is going to make sure that you have a clear path. Guys, 2/3 of the equation for a trade happen on only one chart. One chart to focus on. You don't need to look at anything else until the rules are met. When they're met, you're going to go to this small chart. It's a refinement chart. You're going to take this broad stroke of a brush that the large chart provides, and you are going to whittle it down, so to speak. Let me let my Texas show there. And you're going to be able to refine it to one spot, to only one entry point where the market is likely to continue. And guys, that's going to be how you reduce your risk. That's going to be how you maximize your profit potential. Because what happens in one bar on that large chart, when you establish the trend, when you identify momentum, when you make sure that the path is clear, you're going to be able to take that information and turn it into 15 to 30 bars on a smaller, faster chart to refine that broad stroke. And this is what's going to allow you to pick the best of the best entry point. This is what's going to allow you to have the least amount of risk, and this is what's going to give you the most profit potential. So I'm going to ask you guys respectfully, keep it simple initially. Focus on entries for a high probability trend trade. Focus on having these three advantages. Commit to keeping it simple. Only two charts to get you where you need to be. And the guys, we're going to put these together and we're going to teach you right now the rules for the highest probability trend trade, making sure that you can get into the market where it's most likely to continue with the advantages in place in order to give you the highest chance of success. Guys, this trade gives you a plan capable of winning within your first week with Nexgen, right? If you do the study, ask the questions, and then your knowledge is just going to grow exponentially from that point because repetition creates recognition, guys. And the first thing that we're going to do, which way is the market going? Pretty simple. If the background on your large chart is green, you're in an uptrend. The advantage that you provide yourself is only looking for rules to be met for high probability trend trades long. And if the background on your large chart is red, once again, that advantage that you put into place for yourself is a commitment to only looking for rules to be met for high probability trend trades short, guys. And I asked the question at the top, if you never fought the trend, especially you experienced traders, if you never fought the trend, how many mistakes do you suppose that would eliminate? How many opinions would that nullify to keep you on the right side of things? For most of us, the answer is quite a few. The next thing that the trigger lines do for you guys, after they show you which direction the market is going, is they're going to give you rule number one. And rule number one says that you must have strong triggers. So we're going to identify with the look first. Trigger lines come two parts. Small trigger lines are they're fast, they're solid. Large trigger lines are slower and they're dashed. So these are the two elements, guys. When the small triggers break above the large triggers, when they create space between themselves and the large, when the large are wide and angled in the direction of the trend, this is when the market is most likely to continue in the direction of the trend. We call this odds favorable momentum. This is a very key phrase you're going to hear in class all the time. Did the market have odds favorable momentum? Did you have a market that was likely to continue in the direction of the trend? If you did, this is the most advantageous look to buy a pullback at Fibonacci support on that smaller, faster chart. And you're going to see these tails on the 13.2, on the 34.5, whatever your large chart may be, but you're going to see these tails. And remember, what happens in this one bar is 15 to 30 on the smaller, faster. And when the triggers are their absolute strongest, this is the best look for finding that entry where the market is likely to continue. In a downtrend, you'll see the exact same thing. Small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. The odds are favorable for the market to continue in the direction of the trend. And this is the best of the best look for looking for that pullback on a smaller, faster chart to get in, to get into the market, to trade with the trend, to trade with the momentum. And guys, if you commit to momentum in the beginning, especially in the beginning, commit to those absolute strongest triggers, you're going to give yourself that advantage. You're going to give yourself trades where momentum can almost hide other defects in the trade. And if you commit to it, there's your advantage. There's advantage number one, strong trigger lines. When those small triggers work their way back inside of the large triggers, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. And you're going to hear me say that. You're going to see people annotate their charts in the room. ACH, anything can happen triggers. It becomes a coin toss. Is the market going to continue down or is it going to go up? I don't know, because I no longer have the advantage of strong triggers. I no longer have a market where the odds are favorable for it to continue in the direction of the trend. And rule number one is easy to define. You're going to be able to recognize it. Guys, day one, everybody gets rules. Everybody gets odds favorable. All you need is that separation between small and large. It's like a pair of scissors, open wide, ready to cut. This is where your best opportunity to enter the market is, when that OFM, odds favorable momentum, is happening. And you'll notice that it doesn't happen throughout the day, every second of the day. The market goes up, the market goes down. A lot of the times, those anything can happen triggers, those weakened large triggers, happen right before the market changes direction. When you lose the advantage of momentum, the market is less likely to go in the direction of the trend. And you see anything can happen triggers right before the market reverses. And guys, this is without the advantage of Fibonacci or any of those other tools that we use. Anything can happen triggers becomes a prelude to a trend change, providing that odds favorable after. And there's one of those tails, continuation goes down. And then sometimes, guys, and this is where new users find it a little difficult to sit on their hands. Sometimes the larger up and the smaller down, or vice versa. Sometimes your background is green, but your triggers are going down, which means there's no way you have the advantage of momentum. Guys, you're going to see this look when the buyers and sellers are fighting, when they're not sure who's going to win. They're trying to go up, they're trying to go down, and neither can take a firm grasp on creating that direction and momentum at the same time. A lot of people get chewed up in these instances, and if you spend any time in the market, you've probably been chewed up in these instances as well. It's going up. Oh my gosh, no, it's going down. 3 or 4 trades later, you're wondering where your money went, right? Now you have the advantage. You have rule number one that's going to keep you safe during times like this. You don't have to predict. You can sit on your hands, exercise your patience bone, and just wait. Wait for that market to sort it out and give you that odds favorable momentum again. So I gave you the picture of the room, guys. I share a lot of pictures throughout the day. Is everybody comfortable with the concept? Odds favorable momentum, guys. That leads the way. Because when you have the advantage of momentum, everything tends to work out just a little bit better. And once you have that momentum, you have to make sure that the termination conditions are false, guys, that there's nothing in the way, nothing that's going to make that market bounce, nothing that has the potential to make it change directions. You want that advantage of a clear path, guys. And termination conditions, straight from the manual here, are Fibonacci-based indicator that may reverse the market. It's never guaranteed, guys. There are no guarantees in trading. Everything we do is statistical advantages, right? So it may reverse the market, and it's based on a comparison of the area and those same T3 trigger lines that established your momentum. The areas that we are going to recognize, that we're going to respect. Divergence highs, this magenta line, it's going to print anytime a pivot loses momentum. And it's in the background. The indicators take care of it. You don't have to do any math. You don't have to look at MACBBs. You don't have to compare moves. All you have to do is know that when this magenta line prints off to the right, there was a loss of momentum. Momentum did not follow price up. That's all. Coming down. The pivot is formed. The divergence low line prints. We know that the market's losing momentum. Guys, these on themselves are not termination conditions, but we're going to be able to use these lines to pinpoint where the market may reverse. We're also going to look at red Fibonacci resistance, blue Fibonacci support, as well as these yellow 1-to-1s. And we're going to use these areas. Let me give you this picture, guys. This is a great map for my new users, just to identify what it is that you're looking at on the chart. But we're going to use these areas to make sure that you have a clear path, to make sure that the market's likely to continue in the direction of the trend. And you're going to do that with a simple two-part comparison, a simple recipe to determine whether or not an area is likely to hold or has the potential to break. And it begins with price reaching the area. It begins with the price bars, those Nexgen dynamic Renko bars, in a downtrend with odds favorable momentum coming down to this area of support. When price reaches an area, all you have to do is ask yourself, where are those trigger lines? Are they still above support? Because if they are, no more short trades. You've reached a termination condition. This is an area that may reverse the market. This is an area that may create a bounce large enough to take you out of a short position. So guys, we respect these lines when price reaches them, and absolutely none of the trigger lines break through because it lets us know that we no longer have the advantage of a clear path. That advantage of a clear path is reinstated when both the small and the large triggers get to the other side of whatever area is behaving as a termination condition. So this picture kind of illustrates price moves up, it hits Fibonacci resistance, absolutely none of the trigger lines break through. Because they don't, this is your cue, guys. This is the, hey, let's just wait a second. Let's see if it breaks, let's see if it rolls. There's nothing for me to do in the moment. And if the market continues up, because areas will break, and the small and the large triggers get to the other side of resistance, you can see that it behaves as support. You can see that there's odds favorable momentum. And there's one of those tails. Guys, that's a potential entry to get you into a trade with a clear path and odds favorable momentum. And again, I asked that question, what if you insisted on a clear path? For you guys that have been with me for a while, how many trades, how much more profitable could your trading be if you just stop trading into areas that may reverse the market? And a lot of people find that it would help considerably. So I'm going to give you guys a couple extra pictures here. I want you to get good. I want you to practice. How do I determine a termination condition? Price reaches the area. Triggers remain below when it's a high, right? There's a pivot with a loss of momentum. I know that there's a loss of momentum because of the magenta line. This pivot is just a pivot. It's an up, it's a down. That's it. It's a little triangle at the top of the market. When price returns to that divergence high and none of the trigger lines break through, now I have a termination condition. And guys, if this termination condition completely reverses the market, large triggers go from green to red, I end up with odds favorable momentum. Guys, now this termination condition is what we call a good top or a strong top. A termination condition that creates a full reversal is a strong top or bottom. Price reaches resistance, all of your trigger lines remain below, even with that odds favorable momentum. This lets you know, hey, no more long trades into this red line because this red line may create a bounce. It may reverse the market. I've forfeited the advantage of a clear path. Price reaches resistance and a one-to-one. Guys, you'll see these one-to-ones collect fib overrun quite a bit. All the trigger lines remain below. No more long trades, right? No clear path. Guys, it really is that simple if you allow it to be. From a low, price reaches one-to-ones, absolutely no trigger lines break through. It's only a termination condition. But when that termination condition creates a full reversal, well, now I have a strong bottom. Termination condition, price reaches support, absolutely no trigger lines break through. Termination condition creates a full reversal, gives me odds favorable momentum. Guys, this is a strong bottom in place. Your highest advantage trades come after a termination condition that creates a full reversal. Here's one of those pivots, not a termination condition, just a loss of momentum. But when price comes back to that line, price reaches it, triggers remain above. Now it's a termination condition. And if that termination condition creates a full reversal, I have what's called a strong bottom or a strong top, guys. So there's that picture. There's termination conditions from highs, from lows. Is everybody comfortable with the concept right now? Price reaches, if nothing breaks, sit on your hands. Give it a second. The market will always work itself out. Price reaches resistance, no trigger lines break through, no long trades. Price reaches support, no trigger lines break through, no short trades. 90% of what you do throughout the day is just going to be sitting on your hands, waiting for a minute, waiting for those advantages. Price comes up to that divergence high, triggers don't break. Now you have that pivot stop out of a divergence high. Guys, this is powerful. But when it coincides with Fibonacci, it's even more powerful. And when this termination condition creates a full reversal, smalls below the large, there's another one of those tails giving you your highest chance of success, guys. This is your best of the best trade. This is your first 30 days with the software. One more picture, guys. Let's reinforce the lessons, right? Recognition through repetition. Price reaches these one-to-ones. Absolutely none of the trigger lines break through, even though it came screaming in with that odds favorable momentum. That simple fact, that simple price reaches doesn't break, lets me know that I shouldn't be going short into this area. Thank goodness, because it keeps me out of trouble, right? This termination condition ultimately creates a full reversal. The full reversal gets my small and large triggers above resistance. It begins to behave as support. My smalls are outside of the large, and there's one of those tails at my highest probability trade. That trade that typically wins 70 to 80% of the time, guys. This picture right here, this is your best of the best. This is the look that we're looking for each and every day to give you the best chance of winning. Sometimes the market seems to bounce off of nothing, seems to change direction from nowhere. Sometimes the market has odds favorable momentum and absolutely nothing in the way, and your brain is thinking it is time for a trade, these advantages are in place, and then it just seems to go the other direction. There is one more termination condition that you're going to look at on a 5-1 chart, guys. The only termination condition that I respect on a smaller chart. And that's 3 divergences in the same location. 3 losses of momentum in the same price range may terminate the trend. Because what happens in only 1 bar on the large chart happens in 15 to 30 on the small, I'm going to be able to recognize that change faster when I see these 3 divergences on the 5-1. It's going to give me that heads up that, hey, Mark, don't take any more short trades. The market may push up higher. Don't take any more long trades. The market may push down lower. You can see visually the loss of momentum. Guys, this becomes even more powerful when those small triggers go from odds favorable, that OFM, right into anything can happen. So now I've lost momentum visually through divergence. And I've also lost momentum visually through the small triggers returning to the large, getting inside. Anything can happen. This adds power to the 3 divergences. And more power still when that third divergence is higher than the second from a low or lower than the second from a high. It's a head and shoulders pattern, guys. And if you see this happen on a chart, this is your idea. Hey, things may change. I should be looking for change on the large chart because the small chart is showing me this look. And you're going to see that look from a low down here where the market seems to turn, or that look from a high. And guys, not only is this going to help you recognize change and maybe not getting into this long trade, but these 3 divergences in one location are also going to become valuable as you learn to manage your trades. When you take the best of the best entry, maybe that market's going short, you had all the advantages. 3 divergences lets you know that it's time to take profits, get out of that trade, and wait for the next best opportunity. And this is going to help you a lot as you grow with the software, as you get beyond those entries and turn management into that next thing that you work on. So, guys, termination conditions are a key part of what we do. Termination conditions keep you from trading into areas, from making sure that you have that clear path. Termination conditions also act as the anchor for the highest probability trend trade that you can take. And guys, it really becomes a pretty simple process. And this is a great thing for you to do on the weekend. Price reaches resistance. Here it goes right now. Absolutely no trigger lines break through. You're just going to sit on your hands. Sometimes price reaches resistance and you have to sit on your hands, but that resistance breaks. And look at this. When the small and the large get above resistance, there's one of those tails. There's one of those tails. There's some of those opportunities to continue with the market. Let it break. Price reaches resistance, no trigger lines break through. Look at the reaction. Just a little bit of a divot, right? Right back to support. There's the tail. Market continues. Right into one-to-ones, no triggers. Guys, you can scroll back and begin to gauge termination conditions. And you'll be able to see them. You'll be able to recognize them. And you'll be able to get them right in the moment, giving you the opportunity to understand when the market is likely to stop, when it's likely to continue, giving you those advantages. So with those first two advantages in place, guys, it's time to find an entry. It's time to find that spot where the market is most likely to continue. It's time to refine that broad stroke of a brush down to a window of opportunity. Rule number 3 says you're going to use a limit order. You're going to wait for the market to come to you. You're going to be able to pinpoint this spot and literally have an order waiting on the market to come back. You're going to use that limit order to buy or sell a pullback, meaning if the market is going up, you're going to have an order to buy. If the market is going down, you're going to have an order to sell. But we're not just going to jump in, guys. What's going to happen is we're going to wait for the market to come back to us. If the market is trending up, we want a retracement. We want a small little pullback that's counter to the underlying trend, and we're going to wait for that right in an area inside of favorable large triggers. So when the rules are met on the 13.2, the first thing you're going to do is just look at your chart and ask yourself, are my trigger lines up? Are they strong? Are my large triggers and my synthetic triggers overlapping one on top of the other? Because if they are, this is your favorable large triggers. Every high probability trend trade comes from a line, comes from an area inside of favorable large triggers. So defining what a favorable large trigger looks like is going to create a huge advantage. There may be a point where you fudge this rule a little bit, and that's okay. As you grow with the software, you're going to learn to bend your rules. But we're going to identify strong triggers, one on top of the other, favorable large triggers. We're going to identify odds favorable momentum, smalls above the large for a long, smalls below the large. And at this point, we're going to identify the areas that may fall inside of those large triggers, guys. High probability trend trades are going to happen at an area inside of favorable large triggers. Those areas can be fibs, they can be mid bands, and they can be yellow 1-to-1s. But the key is that they're inside of those large and synthetic, overlapping one on top of the other, creating the smallest window of opportunity. You're going to identify your window of opportunity when you get a reversal bar on the small chart. This red bar against all of these green bars, this signals the beginning of a pullback, that small retracement, counter to the underlying trend. At the time of this bar, you're going to create the window of opportunity. For a long trade, your window of opportunity is going to go from the highest point of support to the lowest point of support inside of those favorable large triggers. In this case, the reversal bar prints and our window of opportunity is both 1-to-1s and a mid-band inside of favorable large triggers. This blue fib is outside of the window. It's not a part of my window of opportunity. It's outside of those large triggers. I'm not looking for a trade from there. As price reverses, you're going to look for the area inside of favorable large triggers, from the lowest point of resistance to the highest point of resistance inside of favorable large triggers for a short, from the highest point of support to the lowest point of support inside of favorable large triggers for a long. And you're going to train your brain to ignore those areas outside of the favorable large triggers because they are not a part of the window. So when that reversal bar prints, the window is created. Your job is to activate a limit order at the highest point of support or at the lowest point of resistance inside of that window, and then sit on your hands and wait. Is that market going to come back? Is it not? You have no control over that. But what you do have is you have the advantage of momentum through strong triggers. You have the advantage of a clear path because no termination conditions were present. And now you have the advantage of entering the market at the point where it's most likely to continue, inside of that window of opportunity. Guys, this is your high probability trend trade entry. If you commit yourself to 20 trading days of just looking for the best of the best entry, not worried about winning, not worried about losing, but only focused on the absolute best of the best entry, guys, this is going to reduce your risk. This is going to increase your profit potential. As this market pulls down, we're entering at the top of the window because of the momentum and the clear path on the 13.2. But guys, I want you to mentally be ready. You may watch your P&L go against you for a moment because it might go to the bottom of the window, right? And then there's always that other thing. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's a normal part of trading. It's an absolutely normal part of a positive equity curve to take losses now and then. Go ahead and get used to it. We can identify where the market shouldn't go, and you're going to place a stop outside of the window of opportunity, below those one-to-ones, below those large triggers, because if the market continues down to that area, we don't want to be a part of that trade, guys. We've lost the third advantage, that idea of the market continuing from that window of opportunity where it's likely to continue. Guys, because you wait for the pullback, your risk is going to be its absolute least, right? Because you wait for that pullback, your profit potential is going to be its absolute greatest. It's going to have the longest travel time to get up to that next Fibonacci area. Once the market begins to do what it's supposed to do, once it starts to move in the direction of the trade, you can reduce your risk below that reversal bar, minimizing your risk even more so. Guys, people in this room show me trades with 2 to 3 ticks of risk all the time. 2 to 3 ticks of risk for 30 ticks of profit, right? What an amazing way to trade, guys. The advantage of momentum, the advantage of a clear path, and the advantage of entering where the market is most likely to continue. Those tails on a 13-2, if you circle them, if the rules are met on the 13-2, on the large chart, if you have odds favorable momentum, if there is nothing in the way and you see one of these tails going through it historically, and you circle that tail and it lines up with an area of support or resistance inside of favorable large triggers, guys, this is your best of the best look. This is a great study tool. We do not trade tails on the large chart. We trade areas inside of favorable large triggers on the small chart, but the two come together and this becomes a study tool. And you can go back and let's see if crude oil is being a little friendlier here. You can go back when you have odds favorable momentum. You can go back when that path is clearing, and if you circle these tails, you can see how they pull back to resistance inside of favorable large triggers. Pretty amazing. Happens every day. Even with odds favorable momentum and a clear path, guys, there's those divergences. There's those losses of momentum, 1, 2, 3, right in the same general price range, letting me know higher divergence, triggers inside, letting me know that I'm losing that momentum, even though it still looks odds favorable over here. Guys, you're going to get to a point where you recognize this all the time. Price reaches one-to-ones, absolutely no trades long, right? Even with that uptrend, even with everything pointing up, the market pulls all the way back to support. No trigger lines break through, guys. No short trades, even with a red background with the small below the large. I want you to see this phenomenon. When price accelerates from the large triggers and there's room for a full bar before it smacks into those large triggers again, guys, this is what we call the gap theory. And the gap theory states that price is likely to close the gap to the large triggers, which means that any shorts that might present themselves are likely to get run over. So you guys looking for the momentum trade after, right? It's likely to get run over because it's probably going to close the gap to those large triggers. Resistance to support, triggers don't follow. Back to resistance, that divergence high. There's one of those pivot stop outs. There's that full reversal. And it's not a coincidence that it coincides with 3 divergences in the same location, guys. Look at this picture on crude. And let's go back to termination conditions from the manual. And this is why repetition is so key, guys. Doesn't that look familiar? Replace that red Fibonacci resistance with a yellow 1-to-1. Price reaches it. Everything says up. And the sellers fight all the way down to support. And the triggers don't follow. The gap gets closed. The area gets retested. And then you get a full reversal. Price reaches resistance. It pulls back to support. Trigger lines don't follow. Nexgen users, you know better than to get into a short trade here because of those termination conditions. Retests, pivot stop out, full reversal. Boom. Let's make some money. Guys, this is all you need to do. Study it. Scroll back. Look for those opportunities. You're going to find that they don't happen every second of every day. Sometimes you have to wait an hour. Sometimes you have to wait 4 minutes. Sometimes it doesn't happen for most of the day. We're not in control of that. The only thing that we're in control of as traders is whether or not our rules met. 2 divergences takes you right back to resistance inside of favorable large triggers. There's an opportunity to make some money. And then it kind of goes sideways, right? Divergence, 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 divergence. And you take an exit because the market may continue up, because the market may reverse, but ultimately it goes down. We don't control that. When our statistical advantage goes away, we can just sit on our hands. We can just wait. We can be patient. Guys, is everybody comfortable? That's your highest probability trend trade, guys. This is how you study it. Every market, every day, you can come through and look for these opportunities each and every day. You can circle them. You can identify them. You can see when areas have the potential to hold. You can see when the areas have the potential to break. You can recognize that there's fights in the market, buyers, sellers. But when everything lines up, when every chart agrees, when everything looks exactly the way it's supposed to look, that was 8:47. That was an hour ago. Let's see what it looked like at 8:47. There's so much movement in the NASDAQ, guys. But at 8:47, that market pulled right back to the mid-band, right there at the large triggers, right there at that opportunity to get you in, to get you paid. Patience is key. Some say that it's a virtue. When everything says up, coming from support, every trigger line is up, the direction is up, the path is clear, sometimes you're going to get a pullback. And if you scroll back, what does that pullback look like? Well, that one overran a little bit, didn't it? Maybe this is your trade, but it's not if you're following rules, because your areas are below those triggers. And guys, when you see your areas start to fall below the triggers, it changes that rule number 3 dynamic, right? And a lot of times you may get a push just a little bit further. Embracing the rules for your first 30 days, guys, is going to create an awareness. It's going to create an opportunity. It's going to give you a chance to recognize where the market is likely to continue, where it's likely to go, where it's likely to stop. If you take a picture of every trade you take and you post it in this room, I'm going to give you feedback on every picture that you post. We're going to talk about your entries. We're going to talk about your exits, guys, because management's the second piece of the puzzle. And management is something that I can help you with, because we can read your charts after the fact and see if anything changed, see if anything needed a little tweaking. Guys, I'm going to give you this high probability trend trading checklist. I want you to print it out. I want you to put it on your desk. I want you to get the biggest, fattest Sharpie that you can find. And every time you take a trade, I want you to run through this in your head. Is the market coming from a termination condition that creates a full reversal? If it is, it creates an advantage. If it's not, you can still have an outstanding trade if you have momentum, a clear path, and an entry area. Guys, there's a video attached to this trend trade checklist, and it is an outstanding video, and I think you'll find it helpful. John Novak put this together to help you understand termination conditions more clearly. I'm also going to give you, new users, this is for you, the exact same checklist with the exact same video, but I've stolen material from the resource material. I've stolen pictures. Liberated. What is a strong top or bottom? What is odds favorable momentum? How do I identify a termination condition? And where is my window of opportunity for entry? Guys, you can take this one, study it this weekend, look at it, burn these images into your mind, embrace the idea that there are advantages to be taken. Once again, I'm going to give you my spreadsheet with 240 rules-based entries, with opportunities to learn how to manage, with chart reading things, patterns that I see every day teaching this class. A little bit on termination conditions. Guys, steal my spreadsheet. Make it yours, but spend your weekend just looking at the entries and looking at all of the advantages in place. And then finally, how are you going to stay focused? Guys, you're going to have a plan. You're going to stay focused with a plan that keeps you laser pinpointed on the advantages. And this is a simple plan for consistency. Guys, I can't write your plan for you. You need to write a plan. You need to embrace advantages. You need to make sure that you understand what you're looking for. I'm here to help you understand those advantages. I'm here to give you feedback as you develop your plan. But until you're capable of writing one, guys, here's a simple plan for consistency. You may or may not liberate it from the room, but this plan focuses on a high probability trend trade. It gives you every look. I want you to take my pictures of a short entry and my pictures of a long entry, and I want you to go and I want you to find this weekend 10 pictures of a short and 10 pictures of a long. Replace my pictures with your pictures with a little bit of study. This is going to give you nothing more than an entry, guys. This isn't going to talk about management. This isn't going to talk about anything beyond getting in at the absolute best of the best spot where the market is likely to continue. Every great entry creates a management opportunity, but management requires that you can read your charts, guys, and we're spending 30 days learning how to do that, right? 30 days learning to recognize the conditions. So a mechanical approach to management is just as advantageous as a mechanical approach to entry. So in the beginning, put your initial stop outside of that window of opportunity, right? Where the market shouldn't go. You're nailing your entries, you followed your checklist, and your initial stop is where the market shouldn't go. And you're just leaving it there, and only one of two things can happen, guys. Either you get stopped out of a trade, wasn't your money, wasn't your trade, cost of doing business, 20 to 30% of the time, guys. If you take 100 trades, I want you to expect to lose 20 to 30 of them, and you don't get to pick which ones. So we're developing trust in the rules, so when the rules are met, we take it without fear of consequence, right? If we get stopped out, no worries, we'll wait for the next best. The other option is that you get a reversal bar in the direction of the trade, and if you do, move that stop 2 ticks above the reversal bar. There's no emotion, there's no opinion. It's nothing more than waiting for something to happen. If I get a reversal bar, then I move my stop 2 ticks above, and there's nothing to do. I'm either stopped out for a small loss, again, cost of doing business, or it's going to go to my first profit target. And my first profit target's at $100. And you're like, Mark, what the hell am I going to do with $100, right? Well, when it reaches $100, your first contract is off. That money's in your pocket. It's in the bank. It's in your account. They can't take it from you. It belongs to you no matter what happens next. You're going to move your stop to break even. So not only did you get paid, you have nothing to lose. And it makes it easier to sit on your hands and let it either go to your second target of $200 or stop you out break even. And guys, a $100 trade to some people feels like a loss. Oh, I can't believe I only made $100 in 8 seconds of my life. Take that $100 trade and make it 3 times a day, right? That begins to compound at the end of the week. That's a $1,500 week. Guys, wait a minute. That $300 a day, that crappy little break-even trade is $6,000 a month. $6,000 a month, guys. $72,000 a year. If the only thing that you manage every day of your life as a day trader is to get stopped out break even after taking $100, that's not a bad year, right? But when you have these advantages, it becomes easier to wait for that second target to get hit, and a lot of times it's going to be. So you're going to get that $300 trade, right? Maybe you get that $300 trade and 2 of those rotten little $100 trades, and suddenly your $300 day is a $500 day. And your $1,500 week becomes a $2,500 week. And your $6,000 month becomes a $10,000 month. And that creates a $120,000 year. From the exact same 3 trades with a little different result, right? Focusing on the absolute best of the best. In the beginning, keeping it methodical, keeping it mechanical, making sure that everything you do has a reason so that it can be repeatable, so that it can be studied, so that you can create confidence through the memory of success. That's your high probability trend trade, guys. That's every indicator on every chart agreeing for the trade. That plan takes less than 1/3 of a sheet of paper. We said we were going to simplify down to 2 trades, guys. The second trade is a medium probability trade. What is a medium probability trade? It means that most of the indicators on your chart agree for the trade, however, a small issue exists. Your first medium probability trade is what we call a 50-50 trade. And a 50-50 trade is nothing more than an observational look at the position of your trigger lines when you reach an area. If price reaches resistance and nothing breaks through, no trigger lines go through, we're at a termination condition. But we've seen it already today. These areas have the potential to break. You can identify that potential when your small triggers break above resistance or below support, and your large triggers remain on the other side of that key Fibonacci area. You could call this a straddle trade instead of a 50-50 trade if it makes you feel better. You could call this a one up, one down trade, right? One down, one up trade. Doesn't matter what you call it. But what happens is when the smalls break an area with odds favorable momentum, this area has the potential to break. 69.80 has the potential to be broken because of the odds favorable momentum. But it is not a clear path because it's not broken yet. Your small issue becomes a clear path. You have just given up that advantage. That second advantage is no longer present. So when you take a 50-50 trade, when you have these areas with the potential to break, don't forfeit momentum. Don't forfeit it on your large chart. Don't forfeit it on your small chart. And whatever you do, make sure that you're taking that trade from the area where the market is likely to continue. Give yourself that other advantage. A small issue exists, let it be one. Embrace the other two. And guys, when you're looking for this 50-50 trade, your entries on a smaller, faster chart need to be perfect, right? They need to not forfeit any of those other advantages. Because sometimes the small get to the other side, and it doesn't mean that the area is going to break. It just means that they tried to push and then they fail. And you'll be able to recognize the advantages through entry to make sure that this trade has the best chance of success. So when I'm looking for a 50-50 trade, when the smalls break through and the large don't, and I put this on here because remember, this is a business, right? You're making a good investment. My money is worth a perfect entry on the 5-1, not sacrificing any other advantages. No divergence, no loss of momentum, no slowdown on the 5-1. Strong triggers, embracing the idea of that odds favorable momentum, and a small window of opportunity, guys, providing the absolute least amount of risk because this trade hasn't broken yet. This area hasn't broken. I don't have a clear path. 50-50 trade, smalls are through, large are not. Divergence is not present. Strong triggers letting me know that there's momentum, and because of the tiny window of opportunity, my risk is minimal. Guys, this is how you take a a medium probability trend trade as a brand new user. I've included this onto the simple plan for consistency, and I've given you a checklist, the same kind of checklist you can use for that high probability trend trade, you can use for the medium. It talks about momentum on both charts. It insists that there's no divergence, and it makes sure, guys, this one for brand new users, that you're coming from a good top or bottom, that you're coming from a termination condition that creates a full reversal. It creates an advantage. As you grow with the software, you're probably going to eliminate that part of the equation if everything else is true, right? But we're gauging advantages, and the advantage increases when it comes from a good top or bottom. If there's divergence, no trade, plain and simple, black and white, right? You've lost the advantage of momentum as well as a clear path. Guys, sit on your hands, let it break. This is going to help you get into that first medium probability trade, guys. Because it's a different trade, because it has different conditions, you're going to manage it differently. Medium probability trades have to be managed assertively. Your initial stop is still outside of that window of opportunity. When you get a reversal bar, you're still a tick or two above it. But now, rather than looking for $100, you're looking for that first trouble spot. Where is that fib that didn't break, right? Where is that divergence low? And that's where you're taking profits. You're getting quick profits on an aggressive, assertive management style. If divergence prints after your entry, your checklist says that divergence can't be present, right? That becomes an exit condition. Quick profits on the second on a medium probability trade, guys. These trades can be amazing. They can be the vast majority of what you do during a day. In the beginning, give yourself the best chance of success until you have the repetition to understand, to read your charts in the moment, and give you that best chance of success. So guys, there's that KISS plan. Keep it simple, silly. Right there in the chat box, take it, download it, look at it, study your looks, study your patterns, right? Get into the market, get out of the market, take a picture, annotate that chart. Post that chart in the room, post it into your spreadsheet, use a checklist every time you enter. And guys, pay attention. Wait for the advantages. And when the advantages are present, you're going to be able to take that market up, you're going to be able to take that market down, and you're going to get into it knowing that you had the best opportunity for success. One, two, three divergences, third higher divergence, and the market continues up. Guys, patterns repeat themselves all day. I'm going to take 5 minutes. I'm going to go refill my water. I'm going to high five my wife. Guys, while I'm on break, if you take a trade, post a picture. If you have a question, post it in the room. Let me know what you're wondering, right? Let's talk about some concepts today. Let's talk about management today. Let's talk about the best of the best entries. Let's talk about the path, using the spreadsheet, taking pictures. What are the charts for? Guys, you let me know what you want to talk about. I'm going to leave you with crude oil. It's kind of bouncing around. If your rules are met, take a trade. If they're not, sit on your hands. I'll be back in 5 minutes, guys. Mic silence for a second. All right, guys, sorry for the delay. We are back. Guys, this is the part of the day where I'm going to come through. I'm going to go through the chat room. I'm going to scroll up to the very top. I'm going to look at the charts that you guys have presented. And we're going to talk about them. We're going to talk about these after the fact, guys, when there's no emotion, nothing going on. Everybody's excited about a trade mid-trade, and then after the trade is when you can relax, when you can go back, when you can study, and you can kind of say to yourself, hey, this is what happened, this is where I'm at, this is good. Guys, I'm going to talk about trades from the eyes of from the rules. I'm going to come from the rules. I'm going to talk about, are the rules met? Where are we? And guys, this is Joel, first one. Odds favorable. Smalls breaking above. The triggers are above the area. And Joel says, man, with this look, I'm going to take an entry just above support inside of favorable large triggers. My stop's going to keep me safe. I'm not going to move it till I get that reversal bar. And he gets paid on the way up. Beautiful trade, Joel. And then we come into the next one, and we've got a couple extra charts, right? And that's okay. I'm going to use a two-part process first. I want to look at just two charts, and I love that you see that there's a checklist being used. And a couple things that notice coming into this one. Don't have odds favorable momentum. I do have those anything can happen triggers, right? I've got those triggers that don't say the market's likely to continue in the direction of the trend. It just kind of says, we're losing it a little bit. And then you'll notice on the 5-1, even though there's no divergence, those small triggers have already returned inside of the large, right? Visually, we can see that loss of momentum, and that's okay, guys. If one thing is wrong, totally cool. It becomes a medium probability trade. We'll manage assertively. The other thing that I noticed on this one, and I'll blow it up just a little bit, is that my large triggers, my synthetics, are all the way down at the bottom of the move, and my large have this huge gap. So there's this split between large and synthetics, guys. And when you have split triggers, you give away one of those advantages, right? Favorable large triggers are great. It means everything's working together. There was an area inside of favorable large triggers. The stop placement is completely appropriate. It makes sense. It's outside of where that market is likely to go. But that advantage of momentum, guys, it pays dividends. Momentum will hide flaws. It's the coolest thing ever. On two charts, it looks great. If you add in another chart, this is a large chart. This is a 21-3. Once again, kind of losing momentum even on that biggest chart, that higher time frame. And then if you add in a range chart, divergence prints, that loss of momentum, the sellers are stranded, the high volume area printed. Guys, I'm a big fan of adding charts. I use range charts in my own trading, but make sure that your key elements, that your two charts, that your large and your small are giving you the best chance of success. And if they're not, if you're going to add another chart, don't ignore red flags, right? Make sure that you're using them the way they need to be used. Make sure you're taking the information and able to get what you need out of them. And if you're not sure how to utilize it yet, post a trade in the room. We'll talk about it every time. John Novak says everything says up. The triggers are up. The direction is up. The momentum is up. Everything is up. He takes a pullback, it's a little bit lower, and guys, this is one of those usages of an additional chart. He has what's called a high volume area on a range chart. Guys, when you get comfortable with two charts, this range chart is an amazing opportunity to help you refine trades even further. When everything says up and those areas are falling outside of the trigger lines, guys, it may push lower. John was able to use this high volume area chart to say where should it push lower to, right? He uses high volume area, he used support, support, support. Two losses of momentum, it pushes lower to that area of support, and he says, hey, I'm going to take a trade. And it worked out great. Nice trade, John Novak. So three charts can be helpful, guys. Make sure that you're using the information. This is an absolutely brilliant picture. I want you guys to see this. Termination to termination. There's not a trade on this chart. But there's some great chart reading. It's just surfing between termination areas. My triggers are flat, momentum's not there. Absolutely nothing for me to do in the moment, so I'll take a picture of it. I'll do some chart reading. But there's not a trade to take. I am a huge fan of sitting out of trades when the rules aren't met, and I think it's awesome when your chart reading helps to keep you safe. Anything can happen, triggers. Loss of momentum, smalls inside of the large, right? He says no trade. Divergences are printing, pivots, stop outs, trend changes. Just keeping himself safe. Saying, man, not my trade. And then here he gets odds favorable momentum. It's a 50-50. The trigger lines are coming down. And he's taking this pre-trade picture. I think if this happens, then I'll do that. Possible pullback once it's cleared. And then almost like he was predicting the future, those patterns repeat themselves and it comes back. And it hits that area that he pointed out and the market continues down. What a great opportunity to take the short trade. And I know that Gary wasn't in front of the market when that would happen. And guys, I want to remind you, if you're going to watch multiple charts, that's okay. Keep it moving, right? Keep it busy. If you're going to watch multiple markets, maybe you're watching the S&P, maybe you're watching crude oil, maybe you're watching the NASDAQ. How effective are you going to be spread out between three markets? It's okay, but if you miss a trade on one, make sure that you don't go into revenge mode, right? Make sure, I was looking at a different chart. I didn't take the trade. What's going to happen is your brain's going to have that feeling of missing out. Make sure that you're not spreading yourself too thin, guys. There's plenty of opportunities all over. And then John's waiting for that setup. Once again, split triggers, right? 50-50, two divergences, split triggers. A lot of information. They're saying that this isn't the perfect trade. And if it's not the perfect trade, it's going to have to be managed assertively, which means that if a third divergence prints, you got to take an exit. You got to be aggressive. You got to make sure that you're not sitting and hoping when the conditions change. Great management, John Novak, on both sides of it. Recognition that it may go to the top of the window because of the divergences. Recognition that a third divergence can end the party. Guys, taking medium probability trades is awesome. You just have to be able to read your charts fast enough to manage them. Z, nice to see you posting in the room. Z says he took a trend trade early, got paid on both. And then he takes the next one as the market pulls back to support and takes it all the way up to Fibonacci. Z, great trading, trading with the trend, trading with momentum, trading with the path. It can be that easy, guys, when everything agrees. Things almost get simple. It's pretty cool. All right, Gary, let's see what you did. You had a termination that creates a full reversal. You had odds favorable momentum, and this was a 50-50 trade. You said you're waiting for price to clear support, then pull back to the mid-band. But you have a clear path, you have odds favorable, and if no divergence prints, that fits your checklist. No reason to wait for price to clear support. You've got a 50-50 trade, and if the conditions are right, there's your opportunity. Because if this support creates a bounce, you're going to be kicking yourself that you didn't take the move down to it, right? Then it reaches support, and you say, oh, got to give it a second. And as it clears it, the triggers are down, the triggers are inside, momentum prints, and you're waiting for that pullback to that small little window of opportunity. I like it. That's the same picture. Oops. And that's the same picture. Just waiting to see if you get that pullback, right? Mark, how do I read this chart with higher divergences going up? This is your large chart, right? Safi, are you with me? Same recipe. Same recipe for areas, right? Or for termination conditions. Whoops. Let me take a picture of your picture. And this is a great lesson for everyone. This is an awesome question. Actually, we'll just keep it consolidated. So this is a divergence high, right? And this divergence high can act as a termination condition. If price reaches it, no trigger lines go through, we're respecting the area. The same with this one, 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 the same with this one. That's it. We have to respect it. It's a termination condition. But remember, Safia, that the rules and the recipe is that when the trigger lines break, the area is broken, right? So when the large get above and your small get above this divergence, I see a potential pullback. When your small and large get above this divergence, I see a potential pullback. Small and the large get above. This may have been a trend trade that didn't work, right? Then you get two. Previous divergence isn't really broken yet. And then you have to wait for it to get back above. Does that make sense? The exact same recipe. Just because they're printing all the way up, it means that there was a loss of momentum at the pivot. That's all it is. When your trigger lines break, just the same way, when your smalls and large get above resistance, it's broken. It acts as support. The same thing is true with these divergences. So all the way up, when price reaches that divergence high, we respect it. We do the math. When small and large get above it, smalls are above, boom, there's your entry. That's okay. It's just a termination condition. That's all it is. It's that simple recipe. When I reach it, where are my triggers? It's either broken or it's not. Does that help a little bit? So let's see what we had here. You had a 50-50, right? So here's your divergence high. Price reaches it, triggers are below, smalls get above, but the large do not. So 15,330 is a 50-50. Are you comfortable with that concept? Smalls are through, large are not. It has the potential to break, but it hasn't broken. Here's your first divergence. The small triggers broke it. Your large triggers remain below. So you have two divergences on a 50-50 trade. You take your first entry at the midband. Doesn't work out. You take your second entry at 1-to-1s. It gives you, well, you get in after the reversal bar. So I think what happens here, Safia, is you've taken a 50-50 trade, right? So you've given up the advantage of a clear path. And that's okay, right? It's not a deal breaker. But your small chart is losing momentum, right? Your small chart's telling you, hey, it's not really working out. I want to try to push up, but I'm going to let you know twice that things really aren't doing what they're supposed to do. And this is the NASDAQ, right? Let me give you one of my observations on the NASDAQ. And guys, this isn't a rule. This is just an observation for you NASDAQ traders. Let me get over to your 13.2. And I want to show you something that I've noticed. And maybe you've noticed it, maybe you haven't. You can go back and study it. But if I'm taking what is a 50-50 trade, a medium probability trade on the NASDAQ, I like your mid-band entry. I really do, because your mid-band entry, the triggers are still up. They're outside. You're still giving yourself a great chance there. But then those trigger lines roll. And see how price bounces off the bottom of the trigger lines? I see this a lot on NASDAQ, on 50-50 trades, on lower probability trades. And then it comes down to that mid-band again. or it comes to the mid-band, hits those triggers. Then it comes to that next potential bounce point, right? Your second entry. And now those small triggers are coming down a little bit stronger. And look how price bounces right off of those small triggers. And now your small triggers are still coming down. And look how price bounces off of those small triggers. One of the things that I've noticed regarding the NASDAQ is if those small triggers are coming down aggressively, you're going to watch it bounce off of it, right? So if I'm in here and it hasn't bounced and those small triggers are a full bar away, I feel pretty good about it. I've got room to get back to them to that testing point. But go back and look at NASDAQ at how many times you want to go long, but strong small triggers kill that trade. And it'll take a little bit of study, right? Everything still says up. There's that huge gap back to the small triggers, and then it bounces again. And then when you get to the other side of those small triggers, it tries to rocket up. When I get to the other side of those small triggers, it rockets up. Does that make sense? That's just an observation. I haven't developed a rule out of it or anything like that. But one of the things that I noticed on NASDAQ is anytime I fought small, strong triggers, it tended to not work out well for me. Guys, this is crude oil in the moment. I know that we're looking at your charts. There's the 50-50, one divergence, but it continues up. And then once that 50-50 is not a 50-50 anymore, you do get a clear path, and it continues up. So while I'm talking, there's things happening. Safia, I hope that helps a little bit. It was a 50-50 with multiple divergences, and we know from our study that that drops the probability considerably, right? But now you can take that. If you're taking those trades, you can at least identify those small triggers and what's happening. Help you analyze anything can happen triggers. All right, Gary, are you with me? One chart, right? I'm going to give you the clearest cut analysis I could ever give you. You know that there's anything can happen triggers, right? So what do we have? Or what don't we have? We don't have odds favorable momentum. Totally cool. Not a deal breaker ever, is it? Because it can create a medium probability trade. Gary, in the moment, those anything can happen triggers are laying right on top of Fibonacci resistance, aren't they? So you have no clear path coupled with no momentum. Your read here, your analyzation, should be nothing more than I don't give two craps what's going on over here because I've given up two advantages over here. Does that make sense? So you have weak triggers and you don't have a clear path and you have a loss of momentum. You have a second loss of momentum. And what's happening is, and maybe I'm guessing here, maybe the market kept going up, right? And what you're asking me is, was there a way to get in? Maybe you are, maybe you're not. I don't know, but this is a pretty common question. What I'm wondering is, did I miss something, Mark? Was there a trade to be had? But Gary, and guys, you're going to do this as new users. Gary, I just want you to tell me, and I'm gonna really refine it. Is that your best look for a long trade? Is that advantageous? Is that the one that gets you all tingly, going, oh, ho, ho, ho. Triple dog dare you to take my money, market. That looks good. It doesn't, right? That's ugly. And guys, one of the hardest things that you're ever going to have to do is say when the look on the chart is this ugly, I don't care what happens next. I don't care what happens next. And Mike, it can, right? But check this out. Anything can happen triggers in a clear path. Anything can happen triggers in a clear path. Right? Anything can happen triggers plus a clear path. And look at those tails and how they worked, right? Hell yeah, there was opportunity. But why give up the clear path? if you have anything can happen triggers. Does that make sense, Mike? That's the S&P, right? Anything can happen triggers coupled with a clear path can create a cool advantage. Because the recipe is only 3 things deep. And a medium probability trade means that one small issue exists. It means that you may forfeit one of these and still have a pretty good chance, right? You can still have those advantages. I can't fathom why you would want to begin to give up more than one, right? Anything can happen triggers. You have a clear path. It pulls back to the mid-band and comes right up to that pivot. Then you get a second loss of momentum and weak triggers and it pushes down. So guys, don't get remorse about what happens when you're out of a trade, when you're done with a trade. Don't get remorse about what happens if your rules aren't met and you feel like you miss a move, because the reality is you're gonna miss moves and it's just not your money. Who is this? This is a new look. Let me scroll back up. Where was I? Dun, dun, dun. Gary. This is Jose, isn't it? Yeah, it is. Anything can happen triggers. Oh, we're going back one. Odds favorable momentum, no divergence, pull back to resistance, boom, boom. Jose, great entry. First divergence, all that momentum, you say, whatever, I'm good, right? But then check it out. Your triggers start to come back a little bit. Your triggers work their way inside of the large, and another divergence prints. And then a second higher divergence prints, right? Great exit. Jose says, man, that's the one that's going to take me out. Jose, brilliant management on an amazing entry. What a great trade. Guys, notice that every chart agreed. He has large charts, and it agrees. Large chart agrees, 21.3 agrees, 5.1 agrees. Everything says down with strength. Area says it's likely to hold. Beautiful entry, quick profits. All charts agree. And guys, remember when I said that momentum can hide mistakes? Look at the momentum on his chart. It's beautiful, right? This little divergence with strong triggers doesn't faze him a bit because the 13.2 leads the way. Jose, what a great trade. Way to embrace that momentum. That had to feel good all the way down. And what awesome management. Recognizing that change. Jonathan, good morning. Termination creates a full reversal. Full reversal creates odds favorable. Odds favorable starting to go down. So Jonathan, are you with me in the classroom? You want to see how to make an awful lot more money with this same exact look? Rule number 1 was met, right? And it's coming from a termination condition. Giddy up. You had a clear path, didn't you? Your 13.2 led the way, Jonathan. Your read was spot on. And then your nerves jumped in. And your nerves said, oh, shoot, it's going to go without me. So remember that trades come from fibs, midbands, and 1-to-1s, right? Fibs, midbands, and 1-to-1s, yellow 1-to-1s, and maybe that was a mistake here. And you're in at the very bottom of the pullback. And if you waited for that midband, if you waited for that fib, there was a huge amount of potential all the way down to that second higher divergence. Does that make sense? And even more importantly, if you had caught this one, that highest probability trend trade, it might have put you in. You would have already been paid all the way down. But that simple entry, that simple idea that getting in at the areas at those large triggers, it's going to reduce your risk dramatically, and it's also going to increase your profit potential. So instead of going from 70, what was that? 20, I can't tell. Your entry was at 70.19, 70.18, and you took your first profits at '09. You could have been in up here, right? All the way up around 30 something and really maximize the potential for that trade. Great read. Beautiful read, great idea. A little bit of patience to get you back to those great entry points is going to pay dividends long run. It's going to reduce your risk. It's going to increase that profit potential. Awesome picture. Thank you for sharing that. And let me see where I'm at here. Sometimes these all start to look the same. Mike M. Everything says down. The path is clear. Starting to lose momentum, right? Odds favorable momentum ending. Great read. One divergence. Perfect entries. Create manageable trades. And Mike, can I show you something that I notice? You're welcome, Jonathan. We're going to do this every trade you take, I promise. So Mike says market flow signal, right? And he's in before it. And guys, this is kind of cool. This is a good read on Mike's part. He knows that he has a clear path. He knows that momentum is waning a little bit, but it's not gone. He knows that this resistance is likely to hold because all his trigger lines are below it, right? Mike, correct me if I say something wrong. And the cool thing is on his 5-1, there's only one spot here at 26 that lines up that gives him that perfect potential entry, right? So Mike says, I'm taking it at the area. This area is likely to stop the market because all the trigger lines are below. The direction is down. The trend is down. Everything is down. Beautiful entry. And then Mike, the market flow signal happened, right? But that was after the fact. You're already in this market. The cool thing is when Mike's in this market and then this prints, it just adds warm fuzzies to an already great trade, doesn't it? And Jonathan, I think this was the same trade, right? Look at the difference between being able to get in at that best of the best spot instead of getting in just a little bit early. He goes from 26 to 16, nope, from 26 to 12, and then finishes off at 8. Beautiful trading. And guys, this is kind of the difference between I'm still learning, I'm getting good at it, I'm reading my indicators, and I'm still learning, I'm getting good at it, I'm reading my indicators, but I'm beginning to trust that entry. Your risk was what, 2 ticks after the reversal bar? That's phenomenal. That's how we make money, guys. Advantages. Embracing the advantages. Brian, good morning. Brian says he just hit this trade. He says everything says up. My small triggers break through. Everything is cranking with odds favorable momentum. Why don't I take an entry at an area right there at those large triggers and get paid on the way up? Nice job, Brian. The only thing I can say about this trade, and I love everything about it, is that the market may have pulled back to these synthetics, right? Those split triggers, that supports one of those potential entry areas too. So it's a little bit of a heavier risk going into it, but once this reversal bar prints and all that momentum's cranking out, you take advantage. Great job. Nice trade. Guys, momentum hides challenges. True story. Momentum hides challenges. John Novak says when a termination condition happens and my trigger lines roll and the high volume area prints and it's right there at strong small triggers, well, I can get paid all the way up to the trouble spot. Guys, this is what we call a high volume area trade. This is a trade that takes advantages of termination conditions, that takes advantage of a trigger roll, that takes advantage of that high volume area printing on a range chart. This is maybe your third trade, guys. This is a trade that if you add it to your plan, it's going to help you catch those tops and bottoms and get in before the first trend trade. It's an awesome trade. Beautiful execution, John Novak. And then Tony, same trade as everybody, right? Clear path, momentum's waning a little bit. You jump in at the perfect spot and you get paid on the way down. Beautiful trade. And I love seeing 2, 3, 4 of you guys taking the exact same trades, right? Isn't that amazing? That we have people in the room from different walks of life, different parts of the world, looking at the exact same software, making the same good decisions, embracing the rules, getting paid, low risk. Guys, I think it's freaking amazing to be a part of this. Odds favorable. Everything says up. Giddy up. Man, you should have taken that one. What kept you out, Tony? Do you guys ever go back and ask yourself, well, what kept me out? You were okay, that's a perfect reason. You were looking at a different chart. Then you have to be okay missing it if you weren't in front of it, right? So you shouldn't have taken that one. You weren't even looking at the market. I would change that annotation. You know what I would say? And this is me because I think words have power. And I think that if you feel like you missed out, you start trading like you just missed out. Fit rules. Wasn't watching. Because now what happens? Now you're like, I didn't miss out. I wasn't there, right? I didn't miss out on cake. I didn't go to the party. That wasn't an option for me. This trade wasn't even an option for you if you're not looking at it. But now you're not trying to make up for that lost trade. That's just a little bit of the mind games that we play with ourselves. If you convince yourself you missed a trade, you're going to trade to make up for that, right? You're going to try and get back into it. John Novak, odds favorable, nothing in the way. Pull back to support inside of favorable large triggers. Guys, can we yell at him a little bit? Talk to me about this entry, John Novak. What got you in so late? All these advantages. I taught you better than this. You waited for a market flow signal because of 2 losses of momentum? Oh, you had your limit lower. You were waiting at support because of, see? And guys, John Novak doesn't have to annotate his charts. I'm going to give him a little bit of grief because his chart reading is what taught me how to read charts. John Novak says that when 2 divergences print, he's going to wait for a pivot stop out below, which puts his entry right there, just above support, which is an awesome idea. But he also says, with all of these advantages, if it doesn't do what the pattern suggests, I'm still not going to miss that trade. Guys, that's head up. That's great reaction. That's nice trading, John Novak, with an awful lot of advantages in place. Whew. All right, I feel bad. I can't praise my brother that much in one breath. Gets weird. Debbie says anything can happen triggers in a clear path. Notice that she waited for the clear path. Mike M., Gary, this goes back to the conversation. No entry here, no entry here. Amazing patience. And when she gets that clear path, she says, all right, it's time to go. This market's trending strong. She takes one down here off the clear path, 77.25. Before it reaches, I suppose. Gets in. Same thing. Interesting entry. Trading that trending market, right? Interesting entry. Not your typical. Taking advantage of a strong trending market using the trigger lines a little bit. You're excited. Great stop placement though, right? Beautiful. Easy to make money on the way up when everything looks good. And you know what's pretty cool is that was your second target and you said, holy crap, this thing's still going. And you just said, let's get back in. That happens sometimes. It's a great trade, Debbie. John says it was called a contingency entry. During a strong trend run, it was almost for sure it was going up. So if there was a signal on market flow, he'd use it versus areas and pay extra. I love it. Guys, great trading going on today. Great trading coming from you guys. A lot of rules-based. A lot of momentum-based entries, right? A lot of clear paths. Jose, everything says up. There's nothing in the way. You get in at a mid-band, quick profits, and you get out. Great use of the 21.3, Jose. Man, this is what I like to see. If you're going to have an extra chart, use it. 83 is a giant termination condition on his largest chart. Jose said, you know what? Pay me. If there's another trade, cool, I'll take it. But I'm not going to hope this breaks. I'm going to put money in the bank. And Jose, up over $1,000 today. Great job. It's fun for me. Fun for me today. And then Gary, there's that anything can happen strong trending, right? So Gary, right now what you're doing is you're working on a plan. How do I trade a strong trending market? What does my entry look like? What does it need to be? Well, Gary, if we're in a strong trending market and everything is above support and it pulls back to support, this becomes your focal point, right? Something solid. Everything is up with anything can happen triggers. Well, if price reaches support and all the triggers remain above, this is an area likely to stop the market. Are you with me, Gary? Price retraces all the way back to that area that's likely to stop the market. Once again, I'm feeling pretty good. It's an area that may hold. Gary, this is where that market flow chart becomes advantageous, right? Maybe you wait for a signal, maybe you wait for a close on the correct side of the smalls, but you've identified using the large chart first. I'm in a strong trending market. There's nothing in front of me. And if price pulls back to 81.14, this is an area likely to hold the same way this one did, the same way this one did, the same way this one did in the strong trending market. It might be worth it to take a shot at that area likely to hold. Does that make sense? Guys, trading a strong trending market isn't necessarily going to look like a high probability trend trade. What it is it's using areas likely to hold to go with that continuation of that strong push. So those are things to take into consideration when that market is trending strong. Great picture, Gary. I hope that was helpful. Earl, strong top, termination, full reversal. You take a little money when it clears, get out at the trouble, let it clear again, and you take a couple ticks on that one, right, on the 50-50. Nice trading, Earl. In and out, quick. Boom, boom, boom. Guys, what a great group of pictures. That took an hour. That was awesome. Going through, talking about advantages, right? Not a strong top, just a pivot. John, be good. Oh, that'll be fun. Boat races. Guys, check it out. Strong top. Or not a strong top, just a pivot. 50-50 on 1, 2, 3 areas and divergence prints. If you're using the keep it simple sunshine plan, if you're using that simple process, guys, that's a 50-50 trade. And you're not hoping that 80 breaks. You're hoping that 80 breaks and you're hoping that 78 breaks. You're worried about momentum, right? You get that loss of momentum. Guys, it's not the perfect trade. The triggers are split. Your window of opportunity was huge. Does everybody follow me on this? He did, Gary. When it didn't get to his order entry and market flow confirmed, he took the trade. Not the best look for a strong top. Right to the midband. Guys, divergence from the middle of nowhere typically hits the midband first. Large triggers never break the area. We're only hoping that they break. Divergence says things may not work out, guys. Anything can happen triggers. Once again, this is crude oil. With the clear path, it's easy to get up. With the odds favorable, it's easy to push up. With anything can happen triggers and multiple divergences, look what happens. Anything can happen. The market pushes all the way down to support, mid-band. Large triggers are all the way up there by those reversal bar marker. We're losing momentum down here at support. This support is likely to stop the market, may reverse the market based on trigger line location. You're in a holding pattern. You can't go short into support with no triggers through it. You can't go long. You shouldn't. You can. You can do whatever you want. But there's no reason to fight strength, right? There's no reason to fight the gap theory. There's no reason to fight direction. Let's sit on our hands, guys. Let's wait. A lot of times when the market's been trending up so strong, and this pivot from nowhere comes right back to support in a mid-band, it's not unheard of for the market to try to reach that next key Fibonacci area, right? Which means that I'm on my hands. I'm waiting to see how it's going to react to this area. It might break, or it may go up and finish the move. I'm not in control of that, but right now I have zero advantages either direction. Does that make sense to everybody? Because it's all about advantages. What's in play right now in the moment to give me the best chance of success? That's how we analyze every day. Guys, none of you are in control of the market. Not one of you. These guys are, the big money investors. And the big money investors are going to establish momentum. And the big money investors are going to establish the trend. And the big money investors are going to react to Fibonacci. You guys have the inside track. You know exactly where these guys may react. You know their key points. You know what's going to behave as resistance. You can use trigger lines to know when that resistance area becomes support. Guys, you have so many advantages that you don't ever have to hope or wish, right? All you have to do is be a remora. Let these big guys give you everything that you need, all those advantages, and then just take a little piece of the puzzle, guys. 4 base hits equals a home run every time. I'm going to take 5 minutes. Let's see how the market reacts to Fibonacci, guys. If you take a trade, post it in the room. If you have a question, post it in the room. I would love for this last hour to belong to you guys. I'll be back in a few. I'm going to walk around, stretch my legs, breathe deep, exhale through my eyelids. Trade away. All right, y'all, let's get into that last hour. John, what did you put up here? Fundamental discretionary traders account for only about 10% of trading volume in stocks today. JP Morgan estimates we were just part of 10% that want to piggyback on the big money coattails. When John developed the software, he had a client who was in charge of institutional trading in the S&P pit in Chicago. His job was to go around to every major institutional trader and get the prices where they had big orders to do big business. Before the day began, when John was done with the fibs and fine-tuning in early 2001, he told him he could tell him all the institutional prices before he got them, so he called them every day for 6 months, very early. Told him the numbers, key fibs on multiple charts, and he was spot on for most of the numbers for 6 months in advance. Before that day, he knew he had done well. Guys, it's not a mistake that fibs work. The software has stood the 20-plus years test of time. So let's agree it works. The only variable is you. You have to make your plan. You have to stick with it. Be consistent. Control the variable yourself. You will be super happy for decades to come. Have a great weekend. Thank you, John Novak. I do like that story because it's pretty awesome. Guys, look at that. Once again, the gap theory wins. Do you guys see it? Price reaches support, large triggers don't follow. Price retraces to the large triggers. Keeps you out of the short. Did anyone take the short and get run over? If you did, it's cool. It's just what we call a mistake. And mistakes are growing, right? That's how you grow. By getting run over on simulator when the gap theory absolutely kills you. Debbie, did you see it in the moment? I know you're working on that. You may not be in here anymore. I know we're getting into that long weekend, right? You did see it. Awesome. You guys, look what the market's trying to do. There's that box I drew. We'll see if they get it. I will be here on Monday, Jose. Actually, I won't be here, but I will be behind the microphone. My run in Oregon ends tomorrow morning. So Monday's class is coming from Washington State, guys, from the high desert. One adventure continued, or done. Which is pretty awesome. So we will be here on Monday. We will be watching the market. You know what? What's pretty cool is Ninja Trader sends these out all the time. I took a picture this morning. Let me copy it and put it in the room. Don't come to Toronto. Worst quality air. Really? Worse than Japan? I thought Japan was pretty bad. Don't they wear masks over there even without? So Safia, here is the run. Ninja Trader sent me this one this morning, I think. Oh, you're getting all the smokes. Yeah, that's tough. So out here, forest fires are a real thing. We were on a little weekend trip not too long ago, and the town that we were in was about 50 miles, I think, from fires. Just a big brush fire. They lost about 75, 80 acres, but the smoke came through and your eyes were burning and you couldn't breathe. I couldn't imagine major wildfires, how much that affects things. I've heard, but I've never been actually near it. So hopefully everybody's good. Malaria in Florida, there's a shot for that. So yeah, guys, Friday, regular hours, right? Everything's good to go. On Monday, they're closing early at 12:15. The market's done, guys. Monday's a holiday for people. These guys make money outside of the holidays. They're going to come in. They're going to do a couple little this and that. The volume's probably going to be low. Not necessarily. It doesn't have to be, but it probably will be. And then they're going to move into their holiday, and they're going to go drink beer, and they're going to talk about how somebody tried to fight that big trend that they created, and it didn't work out for them. So, guys, there's your lineup, just so you know what's going on. And you're welcome, Safia. Oh my goodness. Support held. Close the gap to the large triggers. Smalls got above the large. The large got wide. They're angled in the direction of the trend. And great googly moogly, there is an area of support inside of favorable large triggers. I feel as though my rules are met. Ron, good triggers, lazy momentum, quick entry, quick exit, support, beautiful. You got a fib where I don't. Nice look, Ron. Great trade. What do you guys think? Did a termination condition create a full reversal? I feel like it did. Did the full reversal create odds favorable momentum? I feel like it did. Do I have a clear path? I feel like I do. Do I have an area inside of favorable large triggers? Guys, that's how fast it can happen. Few malaria mosquitoes all in the same countryside wood patch. They bombed it. No cases since. Mike, I'll be here Monday. I can't go 3 days without you guys. I get sad and lonely. Guys, there's always going to be something, right? Malaria. Remember, Ebola was going to get us all, and then the bird flu was going to get us all, and then the pig flu was going to get us all. John. Sharks, alligators, snakes, and malaria. Guys, stay out of Florida. It's just a dangerous place. You guys that are in Florida, you're lucky to be alive right now. That's all I'm saying. It's all I'm saying. Stay out of Texas, too, if you don't mind. Divergence, higher divergence. It's all trigger lines, right? 3 divergences off of the bottom. Everything says up. Everything appears to be strong. And how is it possible that it reversed right at a mid-band inside of favorable large triggers? Safia, do you see the small triggers coming down? Isn't that wild? Isn't that crazy? It's a beautiful entry. And it came right back to him. I'm telling you, there's something to that. Study it for me. But what I've noticed is on the NASDAQ, if you're fighting those small triggers, you got to be ready, right? It's pretty amazing, guys. Patterns repeat themselves over and over. All the time. You're waiting for the large to clear? Looks like they have, right? Just a little bit of patience. Just a little bit of patience. It's okay to wait for a slowdown. Advantages are amazing, aren't they? And then you get that lower divergence. It's a good bounce point. I don't have any rules for termination conditions at purple 1-to-1. It's a small swing 1-to-1. So while the yellow ones are taken from higher time frames or from bigger moves, these are just smaller move 1-to-1s. And when you see them on, especially on NASDAQ, they're pretty powerful as places where the market may bounce. NASDAQ has a different feel to it. It really does. It's a different market, guys. The rules are the same. The patterns are the same. But there's a little bit of psychotic something that goes with it that the perfect trade may overrun, right? You scale out sooner on NASDAQ. Jeremy, were you in here for the conversation about those small triggers and kind of the way? Does it again, right? Small triggers are strong down. It bounces. It bounces. And look, now they're starting to roll, right? See how they're starting to roll, the smalls? It's okay on this super faster moving chart. I still have odds favorable. I still have the clear path. And look at how the market reacts when those small triggers start to roll down at the bottom of those large triggers, right? Now you get at least a little room to get things going. Guys, that's not a rule. That's just an observation that I've made from trying to watch the NASDAQ. Jose, trade learned from John's video last year. So you're looking at the momentum trade, right, Jose? I like the trade. I personally, it's not one of the trades that I take. But if you go to the trading rules and you go to, yeah, you go to those momentum trade rules. Let me find them here. Rule number 1 says that it needs a good top or bottom, right? Reversals or breakouts of Fibonacci are preferable. However, as long as the T3 trigger lines are not beyond Fibonacci tops or bottoms, or completely beyond Fibonacci tops or bottoms, you can use the HVA area. And this is one of the challenges, I think, of this trade is that's a 50-50, right? And this area may break and it may not break. And everything still kind of says down. The small triggers are up, but they haven't even really broken through an area. I'm not sure this one fits the rules 100% for that trade, Jose. I think that the small triggers, you need to have a clear path still, right? This one might be just a little bit premature, especially not coming from a termination condition. It worked. Yeah, that's great. Keep doing it. If it's working, work it without a doubt. And you're in that strong uptrend, pivot from nowhere. I like this look more. It's above 70%. Nice. What I like is after this divergence prints, this bar right here, that third higher divergence confirming the overrun. Does that make sense? And by the time you get that third divergence, now your large triggers are starting to roll and it's danced. Might take a little bit of the stress out. It's a great trade. And I like that you're studying them. And I like that you're like, hey, you know what? Let's get on simulator. Let's learn the rules. Let's practice them. Let's take pictures. Let's see how often they work. What do you guys think? NASDAQ traders, is there an advantage to be had? Maybe closing on the correct side of the small triggers? And not just, oh, look, it closed on the... Let it close. Pretty cool, isn't it? Tony, take care. And then there's that 50-50, bad top, right? Once again, we see the bad top that comes down to the mid-band and then starts to head the other direction. We see the bad top that comes down to the mid-band, heads the other direction, and gives you a pullback right to support inside of those favorable large triggers. Oh my gatos. Jeremy P says, hey, Mark, you know what? I've been studying a little bit. Let me show you what I'm doing. Uh-oh, Discord's not letting me get your picture. Hold on. Jeremy, I'm going to try again. It's not letting me get your picture here, though. Would you mind reposting it? Thank you. Jose, everything says up. The path is clear. The momentum is strong. The area is inside of favorable large triggers. And you said wild horses couldn't keep me out of that trade. Jeremy says, you know what, Jose? You may be onto something. Guys, beautiful rules-based trade. Termination creates a full reversal. Full reversal gives odds favorable momentum. Odds favorable momentum provides a clear path. Clear path Strong triggers, tiny window of opportunity, picture perfect. Jonathan, are you going to show me the same trade? Oh my gosh. Guys, there might be something to this, right? I think John Novak nailed it. The only variable is you. The rules work. The patterns are good. The only variable is whether or not you're going to be comfortable enough to take the trade. So if you're in the trade, you've already got a stop in place, right? You've had a reversal bar. I've got a stop. If I'm in at 78, I only had to get to 78 to 88 to get my $100, right? That mechanical, methodical. Most of you guys should be up $100 in this trade. If you didn't take profits, that's okay. If you did take profits, if it's that mechanical plan, now you're up $100 and you have absolutely nothing to lose. And the cool thing is there is your $200 profit, right? You got 87, Alex? Beautiful. So now some of you are saying, you know what, I believe in the methodical mechanical plan. I'm still working on my management, so I'm letting the market tell me when it's appropriate to do something. You've taken $100, you're sitting at break even, your next goal is right there, but the reality is eventually you might use Fibonacci to get to that next level. Brilliant trading, gentlemen. Rules-based. Fantastic. What's changed since you've been in? Let's talk management. Has anything changed since your entry? Do you still have odds favorable momentum? Do you still have no termination conditions? Right? Is everything still going up? Do you still have an area inside of favorable large triggers? Does this little fluctuation on the 5-1 mean that it's time to jump ship? Gary, it's not letting me pick up pictures without a link right now. I don't know why. I can click on them till I'm blue in the face. Thank you for that. And I got it really quick. Picture perfect, guys. Same entry. 3 different people, 4 different people. Exact same entry. So here's what you're asking yourself right now. TJ, M, G, Samuel, if you didn't take this trade, why not? Soph, can you give me the screencast link? It's not letting me open in these images right now. I don't know if it's Discord that's not letting me. Do you have the link, perhaps? And was this the same trade or was this a different trade? Let's take a look. You're awesome. Thank you, guys. I apologize. I'm having technical difficulties with getting those just copied in. So, Soph, let's talk about rule number 3, right? Let's talk about the fear of missing out. I can't tell you how much I appreciate this picture right now. What do you guys think? Odds favorable? Coming from that termination. So, Soph, your window of opportunity, I want you to measure from the top of the triggers to the bottom of the triggers, right? And then your window becomes the area inside of those favorable large triggers. And Soph, check this out. Your exit from the early, oh my gosh, it's going without me entry, your exit was your entry, right? So instead of losing 86, 77, instead of losing $220, that deep breath, that trust in the methodology gets you in at 77, 78, right? Your stop is down here. But can I show you something else, Soph? And I'm not sure if you noticed this. This is the S&P. That's crude oil. How are you making entry decisions on crude oil from an S&P large chart? And that's okay. Lack of trust is normal in the beginning, isn't it? Lack of trust because you haven't studied the look over and over, because you haven't created that belief yet. But Soph, I promise You'll get there. Stay in class. Keep posting pictures. What you're going to find is that what happens over the course of about 30 or 60 days is when you see these great entries enough, you begin to develop that trust and you start waiting for that best of the best area, right? Guys, has anything changed on this trade? And Soph, did you hear your S&P chart was leading the way for your crude oil? They look very similar, but the picture you gave me are two different markets. You guys managing, what's changed since your entry? Alex, has anything changed? Jonathan, has anything changed? Jose, Jeremy, has anything changed in this trade other than your small triggers are now in favor? And that little pullback, that little pivot, guys, you can use that. You can put your stop behind that. Now you're break even plus a couple, and you're still waiting for that second potential target. Guys, always ask yourself, what changed? I had every advantage. Nothing has changed. The advantages are still in place. The momentum is still great, right? The path is still clear. The entry's been taken. Nothing has changed. And guys, the reality is that mid-band inside of favorable large triggers is still a rules-based entry in the event of a pullback. No worries. So I just wanted to make sure that you're looking at the right charts. I noticed it. I wanted to point it out. Nothing has changed. That's management, guys. Management is asking yourself, what's changed? Look how price has dissected this fib and gone above and below and above and below. Buyers and sellers, guys, they're in a huge fight right now trying to figure out which way to go. The S&P has flat triggers, which means that there isn't odds favorable momentum, which means that this can't be a 50-50, which means that that entry may fall under the financial suicide blanket umbrella. Don't have the advantage of momentum. Don't have the advantage of a clear path. If you're a rules-based trader, there's nothing to do there, right? If you're a crude oil rules-based trader, guys, you're still loving this trade. Nothing has changed. Everything keeps getting better. Momentum leads the way. Termination condition created a full reversal. Full reversal created odds favorable. Odds favorable had a clear path. No divergence, strong triggers. Soph, do you see how if you panicked? But if you took the right one, guys, now we have a divergence, one divergence. And I have odds favorable and a clear path and one divergence on a pullback back to an area inside of favorable large triggers. If I'm break even, guys, it might have gotten me, right? Or all of my rules are still met, aren't they? Odds favorable, no termination condition, pull back to the area, stop outside the window of opportunity. All of the rules were still met for the trade, weren't they? It doesn't mean that it's guaranteed to win. And your stop is behind the reversal bar marker. Might be a little big. And it may push down, right? There's the bottom of the synthetics, guys. If it goes below the bottom of the synthetics, probably don't want to be in this trade anymore. But I do have momentum. My path is clear. You guys, I don't care what happens. We're talking about entries. We're talking about rules. We're talking about advantages. We're talking about, was there something going on in that trade that makes you feel good about it? Cost of doing business, rules met, right? So Sophia, two divergences, higher divergence, market goes up, pulls back, doesn't work, no worries. You stay in the Met. Rules not met? It can't be a cost of doing business and the rules not met, right? Cost of doing business is when the rules are met. And it just doesn't work. You had odds favorable. Look at those purple dots. Guys, on NASDAQ, I give these purple dots a lot of respect. No, you're good. They hold. The market reverses. The momentum goes down. And you say, ha-ha, I'm going to make it back. And you did. Nice trade. Way to stay in the trade. Crude oil still trying to figure out what the hell it's doing, isn't it? It still has odds favorable momentum, and it still has no termination conditions. And guys, you're watching it fight. You're watching buyers and sellers duke it out. Those are small swings, Jose. Those are small swing one-to-ones. They're calculated a little bit different than the large swing one-to-ones. Whoops, that's the wrong picture. Sorry. Let's see if I can find my picture on it. I know that I have it. Maybe I don't have it. So what it is, Jose, your large one-to-ones go from larger pivots in the market, A to B. Let me see if I can find the one-to-ones from the glossary of common terms. So the regular ones, yeah, Mike, it happens, doesn't it? The yellow one-to-ones are a 100% alternate, and they're taken from these higher time frames, right? They print yellow, A to B, B to C, C to D, and that's where they print. So your smaller swing one-to-ones, they're from the smaller swings. It's the same idea, Jose. On the NASDAQ, what I'm finding, and guys, the NASDAQ has a different personality, doesn't it? Is that those purple one-to-ones, those small swing one-to-ones on the NASDAQ tend to hold pretty strong. On a chart like the S&P, on a chart like crude oil, it's not a termination. It may create a bounce back. But on the NASDAQ, I tend to give them a lot more respect. And it did, didn't it? It pulled back to the mid-band. They're like the yellow one-to-ones. They're just taken from smaller swings. So it's a little less information going into their creation. Jonathan, beautiful entry. First target, second target. You had it behind that little reversal bar. I love it. Great stop placement. Nice job. Nice trade, Jonathan. Love that entry. That entry makes it manageable, doesn't it? In at 88, take your $100. You get that little pivot, that little pullback, it starts to move and you're right behind it. And then as you grow your management plans, guys, that's where some people say, well, the rules are still met at the mid-band inside of favorable large triggers. I'll take that one, and I'm willing to get stopped out and lose a little bit. I've already been paid on the first contract. And that pulls right back to the mid-band, right? Once again, and we're just kind of in a holding pattern. Great entries create manageable trades. Guys, there's your NASDAQ. NASDAQ is insane, but it creates opportunities. Divergence to the mid-band, pulls up, lower divergence, but the smalls are above the large, and the large are angled down, and the background is green, and what am I going to do? Going to wait for agreement, guys. Going to wait for the rules to be met. Going to wait for the advantage of momentum. Going to wait for the clear path. Going to wait for those rules to be met when everything says giddy up. And then you're going to giddy up. I want to throw this out there as you're developing trust. I share this a lot. And on my own personal journey, it took me a while to believe this, guys. True story. John Novak used to say, I don't care if I win. I followed the rules. I don't care what happens. I followed the rules. My rules have been proven to win more than they lose. My rules create a statistical advantage. And guys, when you stop expecting to win every trade, don't put that pressure on yourself. When you stop expecting to win every trade, you're going to start winning most of your trades because you're not going to put that pressure. You're only going to be rules met or rules not met. When you're going to stop caring about the result because the results are going to be advantageous if the advantages are there. Start worrying about the execution because the execution gets you in at the best spot. The execution has the best chance of success. Guys, this market, the people in control fought just a little bit more than we expected them to, and they pushed it down to the lower area of support, right? And then the buyers stole their momentum. And now the triggers are turning again, and everything is up, and the path is clear, and we're just waiting for that little moment. Maybe we can take advantage of it. That's all it is. It's a waiting game, right? So guys, don't worry about the results in the beginning. Worry about the execution. Get to the point to where you develop trust. I show this picture every day because I think it's important for you to understand this is what you're developing through study. Every time you circle a tail and see that the market does in fact continue from an area inside of favorable large triggers on a smaller chart, you're developing trust. Every time you take that best of the best trade and you're able to reduce risk to 2 or 3 ticks, even if it's a loser, that small loser is a normal part of a positive equity curve. You're developing trust, guys. You're creating confidence, belief, faith, sureness, certainty, certitude, assurance, conviction, reliance. Going full thesaurus on you right now. My favorite is that you're developing a freedom from suspicion or doubt. I don't know if this is going to win or lose because I'm not in control of the market, so I can't doubt its abilities, right? I don't know. I'm not in control. I can't be suspicious. But I trust that with my rules met, I have the advantages so much so that I need to take this trade. And you're going to get rid of distrust and you're going to get rid of skepticism. And guys, it comes through study, right? It comes through following that educational path. And to minimize your learning curve, post pictures in the room. Have I mentioned that yet today? Or every day, 1,000 times a day for you guys that aren't doing it yet? To minimize your learning curve, post pictures in the room. Every trade, win, lose, or draw. Every great sports person in the world has a coach, has a mentor, has someone standing without an emotional attachment helping them get better, guys. That's my job here. If you win and the rules are wrong, you may have a short-term victory and a long-term failure. How are you going to know the difference? If you're brand new, you're not expected to know the difference. If all you've ever done is watch a video, you're not expected to know the difference. To be sure, you need feedback, guys. You need feedback from me. You need feedback from John. You need feedback from Nexgen. We're here to help. If you place the trade on the simulator, if you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new. This is a part of the educational magic that we offer new traders, that we give to you every day, 15 hours a week, Monday through Friday. We give you the opportunity to post trades and get feedback, guys. Everything that you do, everything that you see. We've provided you a spreadsheet so that you can track everything you do, so you can begin to recognize these patterns, so that you have an amazing study tool. Every morning for an hour, we go over the trigger line and Fibonacci rules for when it's okay to trade and reinforce those lessons daily, guys. And you have the opportunity, 100% free of charge, to have a full copy of the software, to have a platform to run it on, to have an established, proven plan that wins more than it loses. You have to simulate, you have to practice, you have to study. You have the advantage of market replay to go back and replay the day to fix things. You can take 1,000 pictures. Perfect. And then guys, and Gary, I don't ever give, Debbie, have a great weekend, enjoy the holiday. Guys, I don't give trading advice. That's not my job. But I can tell you guys, if you've been with me for 60, 90, 120 days and you're still scrambling, perhaps a simplification will help you refocus your attentions, guys. Perhaps a simplification will keep you from chasing everything and chasing the best. Perhaps focusing on trades that win more than they lose exclusively will create an advantage for you. Guys, I say this all the time, and every piece of material that I've ever put together stems from conversations with other traders. It stems from my own mistakes that I've made. And I can tell you the people that look for everything rarely find what they're looking for. Some of you will back me on this and you'll say, you know what, Mark, you're absolutely right. I tried it, it didn't work. But the moment I simplified, the moment I allowed it to be easy, it became easy. I'm seeing it with a lot of you guys right now. A lot of you guys keep it super simple. A lot of you guys, no matter what trades you show me, it looks like the last trade that you showed me. A lot of you guys, I can count on you to embrace momentum and a clear path and find a small opportunity to do it. And then some of you have more options on a checklist than I could keep up with, right? So, and again, I don't give trading advice, but if one of you called me on the phone and said, Mark, I'm struggling a little bit, I would point you in this direction to a simple plan for consistency. If one of you said, hey, I've got so many options on my checklists, I have 4 different checklists for 5 different trades on 7 different markets, and for some reason I can't find the correct trades. I miss them on one while it's not happening on another. I begin to bend my rules because I get bored, I get anxious, I start confusing the rules for one trade with another. Guys, I've seen it 1,000 times. And you don't ever have to listen to me, and I'll never tell you what to do with your trading. But if that sounds familiar, maybe simplification is a good idea. Give it 5 days, right? 5 days out of your life. It is going to be July 7th next week, no matter what. Why not take 5 days and see if it changes your world? Has anyone done that? Has anyone ever just said, you know what? I'm chasing everything and I'm catching nothing. Guys, there's my hand up. I'm going to simplify. And simplification helped. Oh, we went through that, John. Thank you for that. Guys, John Novak is always lurking. He never truly leaves. He never truly leaves. So there's your picture again for the small swings, guys, and what they mean and how they're calculated. No, you're great. Yeah, it's a balmy 64 and mostly sunny here. Tee-hee, tee-hee. But guys, one of these things with the small swing 1-to-1s is you have to understand how they affect the market. On these markets, it's not that big of a deal. On the NASDAQ, they have a very important role on it, right? So guys, bad top, all the way back to the mid-band and support. The market keeps up, loss of momentum, all the way back to the mid-band. The triggers never changed, right? They're still up. The smalls are still above. Everything's still going. I wonder if it's going to find that box that we drew an hour and a half ago. It might. Has anyone ever learned to do something new that wasn't day trading? Maybe it was a sport, right? Maybe you were learning basketball. What's the first thing they teach you in basketball? How to dribble, right? Hey, you want to learn basketball? Let me teach you how to dribble. Let me teach you some basic fundamentals so that you can control the ball. And then I'm going to teach you how to pass the ball. You're going to dribble and you're going to pass the ball. And when you get good at these things, now you have a foundation. Now you've got this core to grow from, right? They don't tell you, hey, you want to learn basketball? Let me teach you how to shoot a three-pointer. Let me teach you how to pick and roll. Let me teach you how to drive the post, or whatever cliche words there are in basketball. I don't watch it. I don't know. They give you fundamentals. Guys, when I learned to play baseball, they taught you how to throw and catch before you ever swung a bat, right? And they don't teach you how to hit home runs. They teach you how to make a connection with the ball. That's your entries. When I was learning to road race motorcycles, I had to learn how to look through the turns. I had to learn when to accelerate. I had to learn when to brake. And eventually I had to put all those pieces together to turn a clean lap. Golf, you have to work on your grip. You have to work on your swing, guys. The idea is that a basic foundation takes you to the next level. Jeremy, I started on a 600 Ninja. No, gosh, this is late 90s. I started on a 600 Ninja, and eventually we raced the YZF-6, the R6. Yeah, I was an endurance racer. We did 4 to 12 hour endurance races. Used to have the R6, fun bike, a lot of fun. But guys, the idea is the same, right? The idea is that if you start from a foundation, if you get good at one thing, add a second thing. So get great at recognizing trigger lines. Nothing else. Get great at recognizing odds favorable momentum. Take everything off of your chart except those trigger lines and say, you know what, I'm going to commit the next 10 minutes to finding odds favorable momentum in tails to see where those advantages really stuck out to me. That simple process of odds favorable momentum sets the tone. And then when you feel comfortable, you know what, I can find this momentum. I can recognize it in the moment. I'm getting really good at it. Well, then add some areas to your chart, right? Get those fibs on there. Get those mid bands. Get those 1-to-1s. And say, now that I'm so good at momentum, I'm going to make sure that my path is clear. I'm going to make sure that my trigger lines have cleared areas. Guys, this is NASDAQ. Look at how those things hold. I'm going to make sure that I have those advantages on every circle. And if I do, then I'm going to see if those areas pulled back or if those advantages gave me a pullback to an area inside of favorable large triggers. One at a time, right? One bite of the elephant. Safia, anything can happen triggers. Odds favorable momentum. Area likely to hold. Beautiful entry. Outstanding profits. That's not a stress and revenge trade. It's a medium probability. Absolutely beautiful. The advantage of a clear path. The advantage of a tiny window of opportunity. The advantage that you forfeited was momentum, right? But because you had a great entry, the stop was good, you took profits on a medium probability trade, I think it's a beautiful trade. I don't think that's a revenge trade at all. Ron, have fun. 85 and partly sunny. I hope you get the other part of the sun and it basks you as you enjoy a chili dog. So Safia, do you see it though? Do you see how your mindset, when you get a little frazzled, changes? Anything, clear path, right? Forfeiting just a little bit of momentum. That momentum, this just makes it consistent with the 13-2, with the large chart. But your area is clearly defined. Pretty easy to make that money. I think you did a great job on this one. But because you're already in that mindset that you've had some struggles, even the easy ones feel stressful. Guys, have you ever argued with your spouse? Right? Have you ever been in an argument with your spouse or anybody at all? John Novak and I are fighting about something. I'm mad at him, he's mad at me, and John says, you know what? I'm going to make it right. And he says, you know what, Mark? That shirt looks good on you. But instead of saying, what the hell do you mean that shirt looks good on me? Or instead of like saying, hey, thanks, I fight him on it. What do you mean? That's not right. My brain isn't in the right place. I'm a little stressed out. I don't know what you mean, but I'm sure it's negative. Yeah, losing that stress, guys. It'll just clarity. That was the worst analogy ever. I'm not good at them. Oh, John posted the Mark Douglas videos. Guys, these videos are awesome. It's a 4-part series. What John posted is a 4-part series. And the 4-part series are about 2 hours each, I think. Guys, I'm going to tell you right now, crank them up to 1.5 times speed and you won't miss a thing. Mark Douglas is the king of awkward pauses. Crank them up to 1.5. You'll get through them a lot quicker and you won't miss a thing. But man, that mental side is huge, guys. Remember, you're the only variable. The software is amazing. Safia, since you started to do KISS Plan and you've started to win more than you lost, thank you for mentioning that. It's true, isn't it? And we all get back to it at our own pace. Some of us, especially if your last name is Novak, we may be stubborn sometimes. I can't tell you how many times I've had amazing weeks on the KISS Plan and decided that I was too smart for it to give a little bit back, right? And then go, whoa, I got to get back to what works. I got to get back to what works. Yeah, great job, Safia. And John's absolutely right. Read the PDF, watch the videos this weekend, pop some popcorn, crack a beer, hold hands with the one you love. And come back Monday, ready to kill it. Come back Tuesday and wonder where everybody is, because remember, it's the 4th of July on Tuesday. And then on Wednesday, guys, I'll be back Monday. We're going to go over all of it. Wednesday, we're going to do it again. Thursday, we'll repeat the process. Friday, Monday, Tuesday, Wednesday, Thursday, Friday, until you are sick of me and you're embracing simplicity. Gap theory and process 100%, Jeremy. What does that mean? That means that if you tried to hop in at a mid-band or a 1-to-1, you probably got slaughtered, especially because it's coming off a termination condition. Nice recognition. Now divergence, everything rolls. The smalls are breaking below the large. The large are getting wide and angled down. The smalls are outside. It's a pretty big window of opportunity. Guys, go enjoy your weekend. Go get some sunshine, hang out, walk down the beach, walk through the mountains. I'm going to be back Monday morning. We're going to do this again at 9 a.m., guys. We're going to talk about rules. We're going to talk about advantages. You guys are going to post pictures. I'm going to give you feedback, and we're all going to hit our goals. Thanks for that, Mike. My newer people, I'm going to call you out. TJ, MG, Samuel, Iceman. I know you committed, but man, let's keep working together, right? Brian, same thing. If you're not where you want to be, take advantage of this classroom, guys. Take advantage of your ability to post pictures. Don't expect to be brilliant sitting on the sidelines. It rarely happens. Get in here, post, let's talk about everything, and let's achieve some goals. I will see you guys Monday morning at 9 a.m. And when I get here, we're going to do it again every day. My email works if you need me, guys. I am moving this weekend, so I may not get them till later. I will see you guys Monday morning. Take care, everybody. Be good.